Good morning, everyone. This is Rose. Today is Tuesday, April 4th. Welcome. It's 9 a.m. Eastern Time. Before I begin, I have something personal to share with all of you, but I want to check first if you guys can hear me. So audio and video check. Make sure all is okay. I can see everything on my end working just fine. Okay, excellent. Well, today is a very important day for me. It's actually it's an anniversary of Rose arriving to United States 26 years ago today and making an entry at Baltimore Airport, DC. So I was young back then, and it was a very exciting day, 26 years in America, but it gets even more exciting. 9 years ago today, 2014, April 4th, I have become a naturalized U.S. citizen. So today is the 9th year of my U.S. citizenship, and I'm a proud Turkish American. So today is a very special day. Hopefully, markets will bless us with good trading today. So it's hoping that they will gift us because of it. All right, so let's get to work. Today, we are going to open up a little bit gap up somewhere around here. We are already there. It's just a 2 ticks above this target and that target from yesterday's price action extension for bulls. So therefore, we already met this target, but we kind of cut this short 2 points, just about 2 points. So we're back to this. Bulls at the open might use this area as support, okay, and go back and finish this job. However, if we continue to go higher, I'm expecting higher prices as long as we stay above 41.73 after the open. If we do that, then I'm going to look for quite a bit more higher prices. However, if we get below this level and we start to get bear bars, we might actually reverse back to the high of yesterday. But the high of yesterday could act as support again, and we might go back up because we are in a bull channel. Whether you look at the 5-minute chart or 1 hour chart. 1 hour chart, the things are a little bit different, but is actually the 15-minute Globex. You can see that we have been climbing up. So there is a channel line, which I'm going to add here, just in case. I could use that. Just trying to connect. So I connected that, and then I connected there. Okay. If we do break this, market could come down to the Globex low, which is right there. Okay, and then we can make a double bottom and a swing, and then go right back up again. What if we stay and not break out from the Globex range today? Can we just come back all the way down here, do a fake breakout with a wick, and then go right back up and stay within the range of today's Globex? Sure, yeah, that could happen, but right now we have this trend line, and this trend line may hold. Okay, so right here there's support. Anywho, but I want to talk about the daily and what has been weekly and daily, and what has been going on there. You can see weekly chart we have inverse head and shoulders, which we talked about. Market sees, bulls see a double bottom here. Bears see that very well too. And bears are going to be discouraged if the market actually ends up taking out the February 2nd high. And if we start to get bull closes, okay, remember this is a weekly chart, so that's going to be difficult. It might take a couple of weeks to get there. But if they see it, okay, they see that that's a danger area because they know the bulls want to take the market up to the August high. However, bears also see this potential bear channel. I'm trying to get rid of this now. We no longer need it. If you connect these highs, okay, we're breaking this, but they see this as an opportunity to sell this breakout, okay, get a double top right here. Once again, maybe 1, 2, and 3. Even if we get maybe this, okay, reach there and then come back down, they're gonna try to sell this because their goal is to bring the market back down here and get a measured move to the downside all the way to here, okay, or at least down somewhere here. But we are bullish and market is trying to break this. The only problem here that we only tested once, twice, or if you actually connect these again, is we're above this. We tested once, twice, third time, broke above, came back down, found support. So this is now a double bottom neckline. What the bulls want is a measured move target to the 4600s, okay? You can measure from there, you can measure from here, it doesn't matter. So they're trying to get there. But on the daily, let me switch daily. Last week we talked about, and the week before, is I had this wedge, okay, bear 3 push wedge down, and I said we are bullish now, and as long as, here, let me get this out, oh there, you see this channel, and I said last week, if we break above this channel, which we're going to be challenged there a little bit, but we finally break above it, we're going to continue to go higher. And we kept going higher and higher and higher. And I said, this area, first, March 6th high was target. We closed above it. Then I said, this blue line is your projected bullish. So just, if you're long term on your S&P account, you know, futures, just hold it because we're going to keep going higher. Now, we are testing this trend line. That trend line is the same as the weekly. Okay, it's coming all the way from here. So I'm connecting that high with that high. And now we're testing for the third time. Bulls are kind of breaking above it because they see these highs, okay, as target. Bears, on the other hand, want to trap the bulls somewhere here and bring the market down here. But even if that happens, okay, we're pretty bullish here. Here's maybe a complex leg, pullback leg. Even if that happens, if we come down, as these EMAs, that's the 10 SMA, which is momentum, okay, is 20 EMA. This blue line is trying to get above the 50 EMA. When the 20 crosses above 50, okay, it's going to be like this. So we go above, both of them, that's momentum, that's a pullback buyers, and momentum could go for a third push. That third push could end up bringing us up to that measured move target. Now, is bears over here with the March 13 and then also is March 22nd. They see a bear flag, but that bear flag failed. So now when a bear flag fails, okay, and we go above it, that means you're getting a measured move. So this is where the bulls are trying to take us up to. First, the 4200 area, this area which is resistance. But then market sees a much bigger measured move to the upside. But I'm interested in this at the moment. So today is Tuesday. If we get some kind of catalyst, Tuesday, Wednesday, Thursdays, well, let's take a look at the, well, there's plenty of time is for bulls to actually break out, tag the 4200s, get us to the 4245. But really the measured move target is what I'm interested in. Now today we have a 10 o'clock and then we have 2 factory orders and jolts coming up. 10 o'clock, okay, and then Wednesday, ADP employment report, international trading goods is PMI composite final and ISM services index. These are all cows. So today and tomorrow is a big deal. Now, Thursday continues with the jobless claims, and then Friday is holiday. It's a religious holiday. So I think the market is only half day open, but no one is streaming that day. So we're going to keep that as holiday. So this week is pretty short. I think we might end up, there's a good chance that we might get up here. Okay, so, but we'll see how this goes. Now the bears want a double top, lower high, and they want to reverse it back down. But even reversing it back down, like I said, we might get that push and then go. So what happens today and tomorrow? We go sideways and down, and then we pick it up is right before Friday. Okay, is Thursday we end up testing these highs. And that could be possible, right? So it is possible. So we'll see how that goes. Let's see. Let's get to the hourly. Yep, hourly. So here's my last week's range is low, mid, and high, right? So we're slightly above the last week's high. We have resistance to the upside. Can we get a double top here and neckline? And suddenly, if this hour ends up being a bear hour and we get a really nice bear bar, right? So, and if we don't make a new high, that would become kind of a second entry, but this isn't the best entry. But anybody who sold here, why would they sell it? I don't know. But they're stuck and they might sell at the highs to get a break even. Now, it might still fail and the bulls could still continue to go higher. This is still a bullish channel. Okay, you can see the bullish channel. But because this is too high, am I actually scared that bulls buying this high? So what could they be looking for on the hourly? They might be looking for maybe move down. Well, we're already up here. Where are we? 41.62 area. We tested the 70 so we went up and we're already rejected. We're coming down. Okay, so as the 20 EMA reaches and then we get to the 20 EMA, if we dip below the 20 EMA, most likely bulls might buy it. Okay, so we might still go higher. So if we do reach somewhere down here, even if the first couple of hours are bearish, I think the buyers are waiting to trap the bears and they want to buy the pullbacks and continue to go higher. So there's that possibility. Unless there's some kind of a catalyst around 10 o'clock with the news bar 7, we might get some kind of a surprise and the bears sell it. We're kind of going into a trading range, and you can see that this bar is a sign that we have some kind of a trading range setting up or a trading range like this. So if we come down to the bottom of that trading range, there's a possibility bulls might trap the bears and we could still continue to go higher. Okay, so just pay attention to that. All right, here, let's take a look. Just want to see what the range looks like. Okay, you can see that the Globex range is not that big at all. We can easily double this range to the up or down. Now, right now, we're rejected up here. We're coming down. I want to check something. That's 2-to-1. Okay, so after hour traders, or you are you like to trade the London session, you can use the Asia session breakout measured move. This is 3-to-1, and they reached. And you can see no bull bars are closing to go further down. So it's coming down. So Asia got a 3-to-1 target there. Now we're coming down to this trend line. If we break the trend line, we might continue, but it's not going to be that easy. I think the buyers are waiting here, maybe at that high, somewhere around 41.58.75. Okay, we might bounce. Now, bears see a head and shoulders pattern, and they saw a neckline right there. So they sold. So they're looking for a measured move target. Okay, you could do conservative measured move. we're already there, okay? So this is probably going to bounce a little bit, but the continuation after that bounce, this is where bears want to take the market down, but that's still part of the trend line. Probably buyers are waiting there, okay? So there's a gap here. Bears are trying to close this gap, but doesn't matter. This is a strong support. Even if we dip below, I think the buyers are waiting here. So that's what the bears are pushing towards, possibly to get that measured move target. Now, if we continue to sell, okay, after bouncing, watch out. This area to the Globex low, we might start to swing long, okay? So, but this area is what I'm interested. I think the bulls are going to show up here heavily. Right now, they are meeting the target there, okay, exceeding a little bit. It's bouncing because they're taking profit, but I assume this is going to go a lot more lower. Even if I adjust it maybe like that, maybe like that. So this area seems to be a good area for bears. So I'm just going to average it because the wicks are too long. Okay. There could be some continuation. All right, let's talk about yesterday. The day before, Friday was a very bullish day. Monday opened up as continuation. 50% of the time, if the prior day was a bullish or bearish trend, you're going to get a follow-through continuation. Possible the first hour, hour and a half, you might even extend to 2 hours. So you can see the bar 12 marks the first hour ending, and you got a wedge here. You got a bigger wedge, right? And some kind of a measured move to the upside also meeting. Let's take a look. Right, so if I take that, that's measured move, and that is nearly 2 to 1, right? So just about. Or you could say, I'm going to take this structure break, either broke from there, okay, so stop goes here, structural break right there, and that's the measured move target right there. Why am I measuring this way? Because bar 78 body is the one that broke that structure. If you take it this way, that's fine, but that target never met. So I like to keep things conservative there. Now let's talk about this very quickly because there's not much time left here. But to look for a trend, if you're looking for a continuation at the open due to the prior day's trend, okay, bull trend, you need confirmation with the bar 1 and bar 2 at the open. That means if the bar 1 closes bullish, and if the bulls are buying above it, that means you're going to get a second bar closing bullish. 2 bars from the open, identical, 2 bull bars from the open with strong closes will going to give you the trend from open setup. So you can buy. The only problem here is that we have a breakout with bar 2 above 78, which is Friday's high, then an immediate pullback with bar 3. Bulls could not close the bar 3 on its high, nor they could close it bullish. So, but it's still a breakout pullback, and the bulls buy it, okay, but the bears try to sell, okay, right there. So chances are we're going to come back and revisit this area, maybe even the entirety of that bar 3. But we're going higher. It's expected. So here's a pullback, another pullback, and possible wedge at the end of the first hour. You get an inside bar 12 right at the highs, and it's gapping from the EMA. Bulls are going to think of this as well, let's buy underneath bar 12, but if the bar 13 closes bearish, we might need to get out. Bar 13 not only closes bearish, but it also is an outside down bar. So you have an outside, inside, outside, okay, and is outside bar, closed below its midpoint, there might be some sellers wanting to sell, okay, because these bears sold here, sold higher, selling even higher, trying to get back to bar 3, okay? So then you get to bar 14. If you didn't sell underneath bar is 13, because not the best sell signal bar, but it is an outside down bar. You have to sell bar 14. Now, if you measure from this pivot level, okay, so you're looking for basically 20 points, right? So here's your 20 points. Is market reaches actually not 20 point, but closes a bear bar. In fact, they closed the bear bar, right? Actually, they couldn't close the bear bar 21.75, so it bounced. They took profit, and then they closed the bar 18 below that. So this is going to continue possibly to 30 point. That's your 30 point. Now, if you're measuring from under bar 14, if you're looking for a 10 point, if you're looking for a 15 point, and you're looking for a 20 point. Now, bears failed to get the 20 point, but they did get the 19 point. Okay, so they did actually tag the zone of 20 point swing, but it's a failure because they could not get to the 20 point. But if you measure from here, market is reaching somewhere. They added extra 10 points to the 20 point swing. It's getting exhausted. Okay, so now if you look left, there's a wedge here, I said, right? So you got that right there, and there. So they're trying to test here, but notice something major happened here. Okay, what happened is bulls have been breaking these structures with really strong bull bars. Okay, and here's another one, up, down, and even both in the gap area. So that's 1, 2, 3, 4, 5, 6 bull bars, pull back, and then another leg and another leg. So when the market gets down here, okay, it's not going to stop there. It's looking for a buy zone. It might dip into the buy zone, which is the size of that low to that high. So 75 high, 76 high, and the 76 low. As it dips in this area, this is where the swing bulls live. Okay, so they're going to buy. You're looking for a good buy signal bar. At that time in Discord, I was posting, writing, typing, and I said, there's no bull bar to buy yet. Don't buy anything. These bears are still pushing into additional 10 point. But I'm interested in buying this. Now I'm looking for a swing setup, and I'm only interested in, a bull bar. I need a pin bar, a bull bar, or a strong closing bull bar, something. Okay, so bar 21 is a pin bar, but I don't want to buy it because it's got a strong bear body. Bar 22 is not an outside up bar because its low is not lower than the bar 21 low, but it's a phenomenal bar that is signaling you that's it. Bulls are coming in. They're probably going to buy above it. They're going to buy the pullback because a bar like this is surprise. They started to take profit, these bears, in an urgency. That tells me we hit a zone that laced with a bunch of buy orders. Okay, so you have this leg. Where would the bears live? Well, if you actually measure it, generally up until the 50%, you may not get any kind of resistance. So this could go on and on and on, all the way to the 50%. There's a gap there. Then we might look to sell. If I don't see bears selling strongly, I will not be interested in looking for market to go in this area. So now we get a bar 35 closing on its low. Bears are looking for a second entry bear bar. I'm more interested in bullish pause and a bullish leg. I am more interested in this area. Okay, I want to see is market sell. I don't want to sell underneath bar 34. Okay, it's a bull bar, but I do see a first sell signal 35. There is also a wedge there. Up on this, down on this, up, down, up. 32 is actually the pullback. Okay, so now I don't like to sell underneath bars like 34, but I see 35. Now bulls are disappointed. They're going to try to buy and break even. That's why I don't want to sell 35. I look for a second, okay, go up and see if they're going to fail. They did fail. Look at bar 37, okay, so micro double bottom with bar 35, but no one's buying, right? So because this bar 37 is a break even for these stock pulls up here, buying at the lows, breaking even, not getting any continuation with 38, and when the 38 closes like that, I know bears are coming in for a second entry short. And if they short this, I'm going to look for a wedge bottom and test of somewhere in this area. That's where I'm going to buy again, most likely. If they break it, then I'm going to sell, and I'm going to wait for this low and bar 21 high test. Now, I kept saying, if we break this below bar 28 low with a bear bar, I'm going to look for market pulling back to the bar 21 high, maybe the low, and that's where I'm going to start the swing again. I'm going to look for this pattern, okay? This is a reversal pattern, right? Bears try once, bears try twice. Generally, this is a little bit higher, sometimes a little bit lower, but it's a trap generally, okay? And then the bulls come in. Now, we did not break that. So here is bears tried once, and if you extend this out, look, that's that trap right there. They tried again, but they can't even get down to the bar 21 high. So I'm thinking, wait a minute, I don't have to wait this much. I can actually buy because these guys are failing. Look, no bear bars closing below bar 43, even 44, and we suddenly get a really nice buy signal bar, right? So you have failure, bears tried once, bear tried twice, beautiful bar, they're going to buy it. If you don't buy that, buy this bar. Beautiful buy signal bar, 59 at the EMA, and you're going to get all these stops above this level is going to be squeezed out. That means bears are going to be squeezed out of the market. You can see that they're squeezing all of these bears out of their positions and as they eat into their stops. So you have that is your right there, 1-to-1 target. And then eventually market actually ended up going up here. Okay, 2-to-1, right? Breakout, 1-to-1. Or you could say, well, what if I take this? That was the 2-to-1, right? 2-to-1. And it even went to 3-to-1. Oh, maybe not. I think it didn't. It tried to get close. But eventually, after the market hours, right, we not only went up here, we ended up going all the way up. So 3-to-1, 4-to-1, 5-to-1, and then finally came down. Okay, so this was a great swing entry right here. You can see it's also a bull flag. I did say that look for a bull flag. Okay, so here is double bottom. It's kind of a bull flat. Bull flats are like this. Okay, you look for a double bottom underneath the channel and look for a pullback and go. Okay, so that's what we got there. And then we continued. So you see this, and if you haven't bought it and the market is breaking that neckline, okay, or that high, and you see this bull bars, just buy. You just have to buy. This is basically buy for any reason. And you have 1, 2, 3, 4 bull bars. Any pullback will be minor, and it'll be bought. And the bulls continue to go higher and higher and higher. This is what L used to call back in the day barbed wire. Okay, so what is the confusion? Price is just spinning, okay, until it's trying to make a decision what to do. You just step back and give it a space. Bears not able to sell. Even the second sells are failing. Bulls not able to buy. So they're trying to make a decision here, okay? They're trying to trap each other, okay? So you can see we gapped up. We're probably going to see if we can test this area. The only problem here that I hope that we would have actually opened right here and then stayed above it and go higher. But we are now gapped up. But opened underneath this level. So now high of yesterday, okay, which is bar 13 high, could still act as support, but it's a bit of disappointment because we didn't really open up here, come back maybe quickly, and then go higher. So now we're probably going to come down to the high of yesterday. And we're going to probably look for buyers around here. We are just about reaching the measured move target, okay? And that's the conservative. Look, my conservative measured move target, as soon as it touches, it bounces. Now, how did I measure that? Why didn't I do this? Okay, I could have, and we could still come down here. But I said, I'm going to take because the wick is too high, too long, I try to average that, and that's a much better, okay, to me, target. You can still use edge to edge or high to low or extreme to extreme and expect 57.25 to be hit. But if you have a small account, it pays off much better to be conservative. But 57.25 is still doable. It's not that far away. That is the measured move target for bears. Okay. We're testing the high of yesterday. It's going to update in a minute when the bar 1 closes in 2 minutes and 55 seconds. But slightly bearish from the highs. It's because, now why is it selling here? What's the other reason? It's selling here, it's because there was a strong bear reaction here. So anyone who sold, they're going to sell at the highs again, hoping for reversal back down at least to the EMA. This area was a congestion zone. Market started spinning there. Okay, so therefore, it's a bit of a triangle, and the apex of the triangle could be a magnet. Okay, so bears are trying to close the gap at the open and test over the close of yesterday also. But if they fail to close a bear bar, bulls can pick up here and we could go higher again. All right, so we met the target and get rid of that. We are at the trend line. This area, if we do break this and close this 15-minute bar as bearish as possible, I think the buyers are waiting somewhere in this gap zone. But this area is now I'm more interested. If the bears are going to continue to come down, I'm probably not going to buy until we hit this zone. And then I'm going to look for a reversal at the low of Globex. So I'm going to give a little bit more room to the bears to close this gap to the close of yesterday. But if they fail, bulls can still buy. Depending on where this 15-minute body closes, we'll know if this trend line will hold or it's going to break, and we're going to get continuation. If this bar 1, closes, and I'll tell you right now, 75, 50, 25, 56.25. If we close a bear bar around 56.25, expect, okay, price to come down to 41.54, even is 41, 52.75, 52, 53 area, 41, 53 area. Only if this body closes 56.25. Gaps slightly open. So a high of yesterday. We did not close a bear bar below it. So I don't know yet. This bar 1 failed to close below 56.25, and if we get a bull bar, we might quickly pull back up to 41.59.50 to 41.60 area, maybe even 61 before selling again. But depending on now how the bar 2 closes. Now, bar 1 close on its midpoint is slightly bearish. If bears get a second bear bar strong, one of the bear bars has to be strongly closing on its low in order to sell from the open. We don't have that yet. So I can't say that this is bearish. But there's an area of interest down below, so I just need a little bit more information. You can see this trend line is still holding on the 15-minute chart. As bulls keep the gaps open and they start to take out the bar 1 high, they're going to want to get back up to this level probably, as long as we stay above high of yesterday. Now, if the high of yesterday fails, that means bulls get trapped and we start to sell, we could come all the way into this congestion zone. Now, I have an area of interest, so I'm going to try to get that. Maybe that. No. Try to get that. Maybe that. Yeah. So can we dip here? Well, they're going to have to show me that they can close bear bars below high of yesterday. I don't see it, so I can't really sell this yet. Just checking the news. Yeah, 10 o'clock. 2 news coming up. And then there is not much in the afternoon. Bears trying to close below the high of yesterday. They need a second bear bar. And you can see the 2 bars are overlapping significantly here. But look where the second bar opened. It gapped up a little bit. Gapped down a little bit, I'm sorry. So bears are trying to close the gap. That gap is still open. They just failed with bar 2. But it's a strong bear close. So you got 2 bars. One of them closed on its low. And body is bigger than the overall range. So the bears are probably going to try to continue this into 41.54 to 41.53 area. Okay, now they're closing the gap. Okay, so we have a trend from the open at the moment. And so far, both the bar 2 and the 3 gap down. So the bears are selling this. But this area, this congestion area I talked about, if they do sell, this is the area of interest first. Now, EMA is right there. We're probably going to test it. Okay, so where are we now? Okay, so we are testing 41.53, now 52.50. So bears accelerated this because it became trend from the open, but this is an area of interest, so we're probably going to bounce. Okay, so we just came 1 tick close to the EMA. I still think that we're going to bounce here to the upside, so these bears probably going to possibly are going to take some profit, and they might sell the bounce again because we now have a gap. The bar is gapping down. You see how high of yesterday failed? I'm no longer interested in any of this. Those are done. Those are kind of met in the after hours. We are now down. We're very bearish. We're now in the area of interest. Okay, I said I'm probably not going to buy until I see this area tested. This yellow zone is an area of interest also. So if you didn't sell, underneath bar 1 because it was confusion, the body closed above high of yesterday. So you expected, bulls that were long probably bought again, but bar 2 closes like that. You can sell. You can sell and expect this gap to be closed and then maybe gap to the EMA to be closed, and then you take profit. So we're taking profit here at the EMA, which is that bounce that I talked about. there's still 1.5 minutes for bears to reach 41, 49, 50 area if they can close this body on its low. And we might overshoot and bounce there instead. Now, ATR is not that big, so conditions are pretty good. Bears trying to close a bar below the EMA and perhaps get down to bar 65. That is the early support now, or maybe here as early as. So 49.50, I want to see 49.50 test by bears and then a bounce. Let's see if they can make it. 49.50 is the target and scalp, and then we're probably going to bounce. So anybody who sold underneath 2, they're going for a measured move, which they already got it, is right there. So is 49.50 was just 2 ticks above the measured move target. So you had plenty of time to scalp this, and we're bouncing slightly. Can this continue into this bar 65 area? It might, but I expect a pullback first and then sell. Just waiting for pullback here, at least a little bit. See if we can get 52 tested. Okay. There might be some sellers here. Big bar is bar 3. So the 50% midpoint of a big bear bar, there might be some sellers there. Because what they've done, bears sold 1 tick below bar 3 and got stuck. Look what's happening. They're disappointed. So now they're going to want to sell somewhere again to break even. They might wait for pullback to reach the 50% of bar 3, and they might place a bear sell order there. And as price comes down, okay, so let me get rid of this. You could do the math real quick, right? So if you sold here and you sell somewhere in the middle right there, where's your break even? Quickly, they will break even right there. Okay, right there as that body comes down. Or other bears will wait for this bar to close, and then they're going to sell, and they're going to look for a bear flag at the EMA, is continuation into this buy zone, and possibly into the area of interest. But this is the one that I'm interested because there's a gap in between. So I know that we're going to bounce here a lot heavily. So I don't want to buy this unless bulls show me some kind of a rejection. This was nothing but a deep pullback and then go higher again. That what we might got is a big down, big up confusion and then go higher because the overall trend is bullish. So if this is a pullback, a deep pullback, and the bulls want to buy this, now is the time that we get a double bottom, even a triple bottom at the low of Globex, trap the bears trying to sell, and we start to go higher again. And we fill this imbalance bar with bunch of bull bars. But they have to show me this. Now, bears are disappointed with this body, but if you look at it, this area is also a small area of interest. And that's another reason why these bears started to cover their shorts, because they know market is going to stall there and most likely it's going to bounce there. But I'm more interested in continuation into this, which is right around 41.45, 50, 44.75. Yeah, we might dip below the Globex low and then trap those bears and then go back up. We'll see. It's pausing right now. Might be looking for a second leg down into that green zone. Okay, so can we reverse here? Could this be enough to reverse and create confusion in the market? Sure. This would tell me then we're going to be stuck in some kind of a trading range today. All right, so hopefully you guys took profit there. I actually bought into this. As I knew that measured move 3-bar at the open measured move target meeting, I exited out on my short, and then I completely reversed and then grabbed a couple of points right there as it went up to 41.52, and that was really good. It's a two-sided trading. What else can happen here? Can we get a swing here? Close that gap and test the bar 2 low, because bulls bought below the bar 1 low. Okay, so bad buy signal bar is we're probably going to go and back up there. Maybe bar 2 low, bar 1 high. I'm sorry, bar 1 low and bar 2 low. But sellers are probably waiting there. Sellers are already trying to sell the bar 4. Early machines broke even with bar 4 body coming down to that 50% I measured for you. Other bears will sell at the high, hoping for reversal down and a second leg into this area. And that's what the bar 5 is trying to do. But bears need to see this bar, take out the midpoint of bar 4, and a close a bear bar. If they don't see it, we could get a reversal back up, and that would create a confusion. So what I've done was to take profit and exit out of, and I'm flat basically here, because this, I want to see bears sell here, which they started to sell above bar 4, but they can't seem to sell fast enough. And this tells me there's already confusion in the market. But I'm going to be patient. I need to see bears close bear bars. If they cannot, I'm not interested in selling, because this could go all the way up to the bar 1 low and even bar 1 close, maybe even open of the day. If we do end up going up to open of day, that is, again, big down, big up, confusion, therefore trading range, trading for a while at least. Bulls trying to reach 41.56 area, 55.56 area. Market is already getting confused. Bears are not very happy, so now they couldn't find any sellers at the midpoint. They did a little bit, but they're now disappointed. So what they're going to look now for 50% of this move down midpoint, see if there are any sellers, and therefore we're trying to reach that 41.55.56 area. There are probably sellers waiting there. We are still always in long bulls. I mean, market has been always in long, you know, since last week. So, you know, on the 5-minute, we now have 2 bull closes. Bears are confused. They might let this go. We might reach this area, bar 2 and bar 1 low. They might try to sell there. But if the bears don't see any kind of bear bar, they might just let it go and wait for market to reach a certain high. Let me put this right there. Look what's happening here. You've got a possible wedge bear flag might be forming. So 1 pullback, 2 pullback, and they're trying to get a 3rd push. So we might actually test that bar on the 2-minute chart, bar 5 low, okay, before coming down. But bears looking for a wedge bear flag, okay, to come down and test the bar 12 low. See, we're now testing that 50%. So I was still long. I took profit at the 52. I was flat. Then I saw this bar 5 closed. I bought again. I held it all the way to the 55, and I just scalped 1 tick underneath just in case, okay, because we're testing just about the breakout point. So I jumped in again. That was a good scalp. You know, little points. But can this go higher? Yes. It just needs to close a bull bar above 41.55. If the bulls close that, then we might continue to go higher. Might test the 41.5750 or 58.50. 41.5750 or 58.50. As early as 57.50 we might test, but we need a bull close above 41.55. We have to get that first. Yes, there's a news. There are two of them coming out. What is it? One of them is Jolts, I think. Yeah, Jolts and the factory orders. You are right, Irfan. 3 bull bars closing on their highs and opening with the prior bar's close. That means you have momentum. Okay, when you have momentum, that could create a even bigger confusion, and we could end up going all the way to the open of the day, tick price. I'm watching this possible wedge bear flag but I don't know if it's going to, in order for it to happen, this third bull bar, which is bar 6, has to close bearish, okay? However, if the bulls manage last second, and there's 35 seconds left, close that body bullish 1 tick above, bar 5 high, okay? That's momentum right there. Bulls will buy, okay? And then even buy the pullback. But if that bar closes bearish, then we have on the 2-minute, seems like a bear flag. Okay, so no one's going to sell this unless they see a bear bar. Okay, so because these bears are stuck underneath bar 3, okay, they want to sell and they want to break even, right? So, but there is no bear bar. Look what just happened. You cannot sell it. That's momentum right there. That's the second leg. Woo! All right. Oh, sorry about my excitement there. All right, so we met my goodness gracious. Okay, so here we go. I said 57.50 to 58.50's target. We just met both of them. So why is that? That's a 10-pointer right there. And if they now close it above 59.75, we're going to go even higher and probably close above bar 1 high. But it should come down a little bit low. So good job, bulls. That's why I said no one's going to sell this if bar 6 does not close bearish. Okay, so it's a 3 bar, and even the bar 6 opened and closed, okay, above where the bar 5 closed. So that's momentum, and there you have it. And that's catalyst. That's the news Irfan just announced. And now where are we going? Well, we're probably going up here. Now that's 59.75. They should take profit here a little bit because we're now breaching. So I would like to see a pullback. I'd like to see a little pullback and then buy that. This is where they're trying to go. My goodness. This was really nice. Okay. So market is always in long, as we said, is nice. Bar 6 ended up being a leg 1 pullback, leg 2. Okay, so it's the pullback. And now we have a strong breakout bar. They're going to take profit with this. I think, am I behind again with this data? Let me check. 61. No. So far, so good. Fingers crossed. I did some optimization over the weekend, but so far my Windows is up to date with its plugs and whatnot, plugins and patches. So hopefully I won't fall behind. All right, so they're taking profit with that upper wick, which I warned you about. Why are they doing that? Well, we can just easily measure and notice that we're at the 15-point nearly. Okay, profit taken, or you could say if you bought 1 tick above, right there, market reached 10-point scalp, so they're taking profit, and that warning was given, so you really need to pay yourself there. Now I like to see bar close after this profit taken up here. Okay, now is anybody who was stuck here bullish, both down here scaled in, right? And I did say that this is an area of interest. I wanted to see bears bring price down to here, 65, but that never happened. There's a gap there. They kept the gap open, and its area of interest ended up buying. Now, in order for bulls to continue to buy, this bar has to close on its high or above its midpoint. So if the bears turn this into now is a bear bar, okay, and it closes in about 1 minute and 17 seconds on its low, they're going to take that opportunity and they're going to sell it because they're stuck down here. And say this bar actually closes, I don't know, bearish, and then they sell 1 tick under, this would become their break-even price. I don't know if they're going to be able to do so. I'm just waiting now. If bulls close this bar on its high, then that's it. Especially if it closes above bar 1, there's only half a minute left. If we close it up here, right, so this is basically high 1, maybe high 2. I doubt it. This is just high 1. We might get a high 2 and continue to go higher. But if it closes above here, bulls probably going to buy it. Think of this as a breakout, pull back, and let's buy again. And we might get a measured move to the upside. Now, this is a bull flag. It's expanding triangle. Okay, here's the apex. Bears want to break below this, and they want to come down and test, and then eventually come down here. But I warned you about this area on the Globex. Bulls wanting to swing from here. Okay, what bulls want, they want to break above this trend line, and they want to get a measured move to the upsides. Now, bar 7 closed on its midpoint. It is bullish. It's not the ideal, bar, but it's still okay. But I don't like the way that it closed. So I'm gonna give bears a little bit of space here. Try to bring the market down, but there's no bear bar to sell here. Okay, so is anybody who's selling here thinking, hey, this upper wick, what a great sell signal bar, but it's not. Bar 7, it's not a good sell signal bar. Okay, that was just getting to the 14, 15 point and scalping, or 1 tick above 4, getting to the 10 point and scalping. That doesn't mean bears are down. They're going for a 20 point scalp. So what the bulls want to actually close above is bar 7 high, and they want to continue with a measured move to the upside. So they're going to have to close this bar. They have to fill that upper wick of bar 7 to show me momentum is in place. If the bull momentum is in place and the bar 8 closes bullish, many of these bears are going to be they're going to be discouraged and they're going to exit out. And what they might do, also this was also other bears selling, maybe 2 point, 5 point, 10 point. They're going to keep selling, but they might be selling like a 2 point above. I didn't measure it, but it's probably, yeah, it's just about 2 point above, selling and breaking even. So if you were a bear and you sold here, okay, and you sold there, again, look where you are. So smart bears selling at the high, they know these bulls are going to take profit at the 10 point. They're like, now is the time to sell and break even. They're getting their break even. If they fail, okay, if this bar fails to close bearish below that 50%, every other bear is going to exit out, even the ones that they did not break even, because they know that they missed their chance. And the market is going to force them to squeeze out of it, like get out, right? So what's going to happen? This is going to go higher. Okay, so then those bears might sell maybe 5 point above, 10 point above, 15 point above. But all depends on how this bar closes. It's already getting its break even with bar 8. Now the bar 8 closes bullish. The rest of the bears that did not get their chance to break even, they're going to voluntarily hit the exit button. And as they take losses, okay, many of them will convert into becoming bullish, and that could end up filling this upper wick with a bull body, and that would represent a momentum, bullish momentum that could take us further up high. So I'm watching this. Let's see what this bar is going to do and where it's going to close in 1.5 minutes. If the bar closes bearish, especially somewhere down here, then they're going to sell, because other bears, then they're going to look for, say this bar closes somewhere down here, okay, then their new break even is going to be right there. But I don't know yet, so I'm just estimating or guesstimating. We'll know when the bar closes. Yes, of course. I mean, it went up, right? So if you're bearish, your stop up here, but there's a trading range. You're not going to put your stop there. You're gonna have a wide stop, right? So they're probably going to sell higher. There's so many bears in the market. You know, some might have already been kicked out. Okay, so some might be still holding on. Those are weak bears. If you put your stop right there, you're a weak bear. Okay, so you see how bar 8 closed is bearish. So some bears are selling the close, and they're trying to get break even. Their break even is right here. But I would not at this point sell this unless I see another bear bar. Because basically you have leg up, pull back, leg up, pull back. Bears are trying to get a third leg up. But bar 8 did not fill that upper wick, which is a problem, but it is a high one. Now, if we get a bear bar closing right around here, this is your target. This is the early target the bears are trying to reach. Okay? Or they're going to try to test the bar 7 low. Okay? There's a little bit of gap there, but there are probably buyers waiting there, wanting to trap these bears. Market is trying to get down here, but they have to really take out the bar 6 low first to continue down. Many bulls, they see an outside inside. They want to buy with a stop maybe down under 6, but kind of difficult to do that. Because if you're already long, your stop is down here. I didn't sell this. I didn't like the way this bar closed, 6. Because if you measure, it's closed right at the 6 point, not 1 tick below. So it's a 50-50. This could go down, okay? If this bar now closes bullish, chances are no one's going to want to sell this. So, but if it closes bearish, 1 tick below where bar 8 closed, bears can still bring this down to where I marked measured move. I'm sorry, break-even target. I didn't sell it. I didn't like the way it looked. Bulls is still trying to continue higher. Some will say this is the first leg pullback, second leg, we're probably going to get the third leg. It's possible. But at this point, I'm flat. Bulls, on the other hand, because this is always in long, they're long, they're disappointed, but they're already aware that these bears are trying to break even here. So they're buying the low of bar 8, trying to push the market higher, trying to get these bears exit out, okay, squeeze out. But they're also fixing, okay, they're not happy what's happening because this is the top of a trading range. Big down, big up, confusion so we might go sideways, but overall trend is high, up. So high of yesterday is a battle point basically, okay, we couldn't stay above it. Now we're trying to get above it. As soon as we get above open of the day with bull bars, market becomes even more bullish. So there's a fight going on here. Bulls are trying to bring the price above open of the day and keep swinging higher so that they can actually get their measured move to the upside, they need a bull bar. They need a bull bar taking out the high of bar 5. But even that happens, okay? So even if we go and take out this high and we make a new high, we're going to come back, okay? Because these bears are going to sell higher, okay, to exit out. But we could still go even further high. All right, so no one really able to sell there. Now, I think they're going to look for a stronger bear bar. It's not there, so I don't know. If this bar closes now bearish, I'll remeasure this break even, but it's not there, so I'm going to get rid of it. No one sold us, so this could go up and take out the bar 5 high, and or if we get a second sell signal, then they might sell that, but I don't see it. So it's high 1, they might be trying to get a high 2, or this was high 1, they're going to buy 1 tick above 7, and they're going to try to get a high 2 there. Now, you might say, how is this a high 2 if we made a new high? Sometimes it's a complex high 2 because we didn't really have a bull body going above that high. So if this is a high 1, technically we could get a high 2. But the momentum is kind of fizzled here for bulls at the highs. It's because bears are still fighting to keep the market below the open of the day tick price and get a second sell signal bar with a much stronger bear body to break even. So this is not something that I will be selling. If I wanted to sell, I would have sold up here and scalped it because of many bears exited out, right? So anybody sold here, they sold back up here. That was their break even. Okay, so let's wait for this bar to close. If it closes bearish, then you know bears are going to get that break even. If it fails, then we're going to go higher. Okay, so they are selling and still trying to get down to possibly here. I'll tell you exactly where they might scalp. 53.50 perhaps, or as early as 54.25, 54.50. This bar has to close bearish. Now, if they do close it bearish, can we come down and test the bar 3 low? I don't know, possible, but it has to close bearish. Market is confused. Big down, big up, sideways. It's trying to get down to the 53.50, 53.25 area. I mean, market is still trying to go high, right? It's trying to reach this area, right? It's trying to reach that area, February highs. So we know that bulls are still pushing, but this trend line, we need to get above this trend line to get back high. I don't know what the future holds. I can only read the market structure. Nobody knows what will happen. Okay, somebody might say something. We could sell 40 points. All I know is that market is confused. It's a two-sided trading. Market wants to bring the price down here. Okay, so now in about 28 seconds, when this bar closes, we're probably going to reach this area. Buyers probably waiting, maybe here, maybe a little bit lower. Okay, so I didn't buy this. I wanted to see where this bar is going to close. Bears are trying to get a double top. Now bulls fail to break out. Bears fail to break out. Now bears are trying again. We have a double top, maybe even triple top. Okay, maybe a wedge top, or we have a wedge top, higher high, double top, and or 1, 2, 3 double top. I'm sorry, triple top, lower high double top, and the bear C is the test of bar 4, or originally they wanted to come down to the bar 65. I'm sorry, 63. I keep saying 65, but it's actually 63 I meant. This is a buy zone. This is where if we keep selling, you know, we might actually test right here. All right, so they did sell. So what would you do? If you sold here, you sell the close again or one tick below. So they're already getting break even, but it's so close to their original price. They're trying to push towards the bar 3 low and test that. So now we have tested the 41, 53, 50, 25 area, but we're extending now. So I think we're going to test right here. Let's see if they can. Good job, bears. I mean, they kind of, you could see that momentum fizzled. I said bull momentum fizzled. They could not fill this upper wick. That should not have happened. Even after that, they should have bought it. That failed right there. So, and I said, we're probably going to test the low of bar 5. We're testing that. Now we close the bear body. Now market comes down to the original price where the bears might have sold or got stuck. Now we're testing that as well. So bears are content, but they want to now continue this furthermore down into this area. And then look what happened here is we went up to the trend line and we're now selling that trend line. Now, if we continue to sell this and we break the Globex low, we could get a measured move to the downside for bears. This area is the first defense by bulls. We might continue to dip and the buyers might actually show up here. Okay, so but on the 5-minute, I'm going to look to see if we can reach here and see if I can buy here. It's an expanding triangle, I said, and the bulls failed to get above, okay, these highs. Now, I said there's an apex. You can use that. You know what? I think I'm going to use this. And this would be my expanding triangle. So I did say if we break this apex, we're probably going to come down and test this trend line. We are breaking that trend line at the moment. So test of here, I think the buyers are waiting here. Okay, so right there, bar 63. All right, so we reached there. Can we sell further down? Maybe 44.25 to 43.25. I think buyers might be here. There's an area of interest. Like I said, this is a balance zone. Market was content there, so that now becomes a magnet. Okay, this is magnet. I like to see a pullback a little bit. Bears to now take a little bit of profit because this is a 20-point move down. Can they move another 10 points? Sure, but it needs to pull back a little bit. So some bears will buy here. It's also a buy zone. So it's expected to pull back a tad little bit more. So I bought into this. I had a buy order right in the middle, and I had a buy order right down here. So I entered with 2 contracts, and I scalped. It could go higher, but it's not a good buy signal bar. You need a bull bar. So I just bought into 20-point profit taking and scalped out very quickly because it can still continue into that balance zone and a magnet here. But this is now, you see how they bounced? Now, if you measure from here, that is the 20-point, right? If you sold underneath bar 10, you didn't get 9-point or you did not get 10 points. So the bears might continue to sell this into here, but they need to pull back at first, okay? So anybody who's selling there, okay, no one's going to sell underneath is bar 7. Why? Well, it is because it's a bull bar. So if they sold here, market did not make a 10 point. So we might still come down. But I measured from the pivot, and that gave me a 20 point. I said, that's great. I know these guys are going to take, because it's important price. Here's another important price. And it's probably they're going to take profit there. I bought into it and scalped. There's some questions here. Ariman says, can we say the bar 7 is an exhaustion bar and a candidate for a higher high MTR? Bar 7. Well, depending on where you're counting, I say that that's a double top because I'm basically looking at this. And you get the double tops. If you look at the RTH, 5-minute charts, okay, if you guys want to get really good at swing trades and you want to find and locate swing trades, I would recommend you guys to study the RTH chart, 5-minute chart format. Especially look at what is happening, okay, at the open and 6-7 bars into open. Swing trades, major trend reversals, might set up as early as with a double top or double bottom at 10 o'clock. Okay, so bar 6 and 7. All right, so we got a bar 7 right there, and I kind of explained it. But you can also say, which I said later on, right, there is a grinding price action here. Right, it's a spike, pullback, and channel. This is a flag. When it pulls back, it always looks for buyers because it wants to go back and test the high again. And then it wants to continue, but it failed. So it comes down. So the bears who sold, they're going to sell 2 points, 5 points, 10 points higher to bring the market down again so they can break even. They started to sell here, which generated that double top. You could say this is a wedge because we had a nice spike, pullback, first pullback, second pullback, and a third pullback. So you've got a wedge, higher high, and a lower high. Sure, could be a major trend reversal, but market needs to show you about a 10-point first, and then continuation 20-point. Market did show you, okay? That's your 10-point and quick profit taking. Then it continued to sell into 15-point and a 20-point. So can they bring it down to the 40-point? Sure, but they need to close a bear bar down here. They're always going to take profit at the 20-point. And we're at a support, so you better take profit too. What if it doesn't continue? Could this be a still major trend reversal? It's a reversal, but to me it's not a major, right? So it's a expanding triangle, therefore it's a bull flag, a form of a bull flag. Okay, so give or take maybe here, or we extend it down. Now, if this bar closes bearish below that line, we continue to sell here. Then you get the rest of your reversal, okay? Then expect another 10 points. Then I would measure additional 10 points, possibly, I don't know, down here. I don't know if we're going to get there. But anybody who sold underneath 10, bar 10, they still haven't made their 10 points. So they need to make their 10 points. They haven't really made anything. Can they sell here? Yeah. It's an inside bar. Bar 12 it's profit taking, and it didn't close below this trend line, so I didn't sell. But they're selling at the high of bar 12. I just didn't sell. I need to see a bear bar. If I see the bear bar, then I'll sell, and then expect price to get down here. So this is now difficult because they bought it right there. But it's probably going to come down again because anybody who sold underneath 10 are disappointed. So they might wait for a pullback to the breakout point, bar 11, and then they might sell there. But it's a disappointment. But I did warn you about this area being a buy zone since the open. I marked that they failed to get in there as they were selling, so disappointed bears, they sell again, and then finally they bring the market there. But anybody who sold underneath 10 is not making money. They made money, but I don't know, they might have just gotten a 5-point, and then they might have exited above that bar 12 because it's an inside bar. I didn't sell. I could have bought it one tick above 12. I wanted to see what the bears are going to do now that they're not in the market. I like to see another pullback and see if I can buy that one. But we're back at the apex of the triangle, okay? And bulls want to get above it, and they want to continue to go higher. I don't know if they're going to be able to do so because it's resistance here. So both the bulls and the bears are able to swing about 10, 15 point, an average 15 point moves, and they're making money. So this is basically expanding trading range. Okay, think of this as an expanding trading range, so expanding to up and down, and both sides are making money. Now, because the bulls made 10 point here, I'm no longer interested in that. Can the market come inside this area? Yes. Bears need to show up here. Now, here's something else. If there were no sellers showing up right here above bar 12, look left, okay? Take a look at these two bear bars. There's a bit of a gap here. There probably sellers are waiting there, okay? So they might actually sell there and scalp. But if the bulls close that gap, then they can take us even higher. But generally, that's where they sit. Look, right here, look at bar 6. They try to sell in that gap. They made money. It's a bull close though, so they were forced to exit out. Right? Eventually they had sell orders there. This bar ended up going up and then came right back here. So they made money. Even if you sold there, you made money. So is this bar right here, 13, reach a 10-point scalp, okay, and taking profit with that upper wick happens to be right in that bear gap area. If the bulls close this gap after taking profit, that means I need to see a bull bar closing around 41.55. If I start to see 41.55 being breached with bull bodies, bulls are going to continue to go higher. If they fail, okay, bears could sell here, could bring the market down, but I don't want to sell here because this bar 13 closed really nice. Like I said, this could be just one big deep pullback and then bulls can show up again. Okay, so expanding triangle. Okay, think of this as maybe high 1 and they're trying to get a high 2 here. They might have already gotten high 2, one tick above 12, even though we made a new low, but we did not break that area. So we're right at the apex. It's complete confusion, and I'm watching to see where this bar is going to close. If the bulls actually close this bar bullish, like I said, 41.55, they're going to want to probably continue higher. If they fail, then we might come down. Trading range trading. But you should have known already that bar 12 failed to close. No consecutive bear bars below this trend line. I mean, even if you connected those lows. Okay, so what does this mean? It means no one's selling. They're buying, they're reversing. But right here, they're sellers. So they're trying to prevent from bulls to close above 41.55. If you were to put a sell order, you would have already made money. So say you put a sell order right somewhere in there, approximately, you would have scalped about 2 points average. So what's happening here is that you get a double top, bulls fail to break out. You get a double bottom, but it's in an angle. So you got bears fail to break out. We're going to get a breakout, okay? So whether it's to the downside or it's to the upside. We're going to get not only we're going to get a breakout, we're also going to get a measured move. But it's just that it's setting up and we don't know yet. I didn't sell. I could have grabbed the 2 point, but that's not what I'm after. We have a fake breakout. Look, bar didn't close. If that 15-minute bar were to close, we would have ended up right here. Now, we did not close that bar. Can this bar now, that 15-minute bar closes bearish? We could still sell, okay? So that bar needs to close below the Globex low. Then we're going to end up here. But I need to see bears able to close that bar bearish enough. See, that area still bears are selling. They're trying to get a 5 point. In 5.5 minutes, if the bears close the Globex bar bearish below the Globex low, then we get a breakout finally. Right? So you have a cup, you have a smaller inverse cup, and we might even sell further down, even here. So, area of interest is a balance zone. This is where bulls are waiting. You could see that seller sold right there again. So if you sold here, they made 5 point an extra tick. So that's a good scalp for them. But they want a lot more. They want 10. So the 10 point is right there. But we need a 6 point. Okay, there you go. So the bears are pushing. That's their 10 point right there. But they can reach now very quickly without even closing a bear bar. Chances are they're going to now probably go for a 15 point after a bounce. Average 14 and a 15. So this is probably where they're going to go. You see that gap right there? Bears waited for market to get up there and gave the bulls 10 point run, and then they sold into it as these bulls were taking profit. If you calculate it, if you measure it, you'll see what I mean. It's a two-sided trading, therefore it's expanding triangle, therefore it's a trading range. But they're pushing now. So that gives us a now wedge 1, 2, and 3, right? 4, 11, and possibly 15 is going to be the next, 15 or 16 is going to be the next push. 15 already went below 11. They're taking profit because that's a 10 point, okay? I did say after that 10 point profit taking, if the bar closes low, somewhere around here, we're going to get continuation into this area of interest. Balance zone is acting as a magnet. So I'm going to mark that average 15. All right, so let's see. We need to get a bear body. We're already breaking below the Globex low, but we really need this body to close on its low. Better if it closes prior low, and then we continue into this buy zone. This is support. We know there are buyers waiting here. The moment that we close here or beyond, expect 15 to 20 point run. 15 to 20 point bears to extend this further down. What if they fail? What if we get a 4, 11, And well, this is basically a new low, bar 15. What if that's all we get and we fail to close below 11.75, suddenly we get bull bars? Can we actually reverse? Yeah, we might, but this is a much better buy zone than here at this point. But bulls are looking for a second buy signal and a trap. Okay, so here's the first breakout for bears. If a second bear breakout, suddenly we start to get bull bars, we might go higher. But I'm waiting for this bar to close and expecting continuation for bears. Bears trying to close that body as low as possible at 11.75 because they know average 14 to 15 point they can get out of this run. There's a gap here. They might try to close this gap. There's magnet here. There's magnet here. We need this bear body to close. If they fail, they already see a wedge here. Okay. Oh no, what's going on? What? Give me a second. Don't crash. Oh no. Okay, my application just crashed. So give me a second, please. Some big move must be coming in. Okay, so I'll follow along from other machine, backup machine. There's a wedge, like I said. I think the bears are still trying to get into that balance zone. I think the bears are still trying to get into that balance zone. I'm going to turn back on the screen in a second. I'm just relaunching the application. They're still selling this into that area I marked. Hopefully you cloned it on your own chart. Magnet below, March 22nd. That blue line I hit on my chart. On the Globex, I had a buy zone, so they're probably going to test that area. 22nd. That blue line I hit on my chart. On the Globex, I had a buy zone, so they're probably going to test that area. Bar 16 is now trying to close that bear body to continue to come down. Body to continue to come down. We're going to reverse this soon. It just needs to come down a little bit more. Reverse this soon. It just needs to come down a little bit more. Okay, I'm almost there. We're testing my Globex buy zone. I want to see continuation down a little bit more at least. Now, of course, my area of interest disappeared because of application crashing. There's a gap here, right there. Bears trying to close this gap. So the test of bar 60 from yesterday, the high of 60, they need to get down there and test it. And then there's a little bit more gapping there. So probably bar 58 high is we might test. That would be 38.25. I like to see bears do better here. I need to see this bar close at the low of bar 15. The moment we do that, we come down further. Let's see, it's 41.40.25 to 41.39.25 is the next scalp target. Also the 15 point. I think, I'm sorry, not 15. Oh yeah, it is, sorry. I have to measure from here because bulls made a 10 point there. So the average 14, I'm going to measure the 15. Bears did close the body bearish enough, so we should continue to come down into this yellow zone. So let's see if they can make it. Can it fail here? Don't think so. I think they're going to keep pushing further down. I don't know if we will get here, but you know, there might be possibility. I like to see, well, that would be 20 points, so we might get there. But I'm more interested in 14 to 15 point scalp first and a bounce. Then we could continue to sell perhaps. But first, I like to see the test of either 40.25 or 39.25. Or as they can push towards 38.25, but they haven't even reached the 40.25 yet. If my math is correct. Okay, that's good. 40.25 to 39.25. See if we can get that at the minimum. Could continue even into 41, 37, 36 area, but I would assume we will bounce. All right, so we're testing the magnet. Is March 22nd high. I don't think we will stop there. We should move underneath. It would be a disappointment if we cannot move under that. Now, I don't know if I did a good job finding this area of interest. We haven't really tested it at all. So we should be able to test it. So I don't want to buy this bar, but we are testing the Globex buy zone, which was a target. I've got a little bit more. I have an area of interest. It's coming from here. See this tight trading range? So I like to see continuation by bears testing that area, a similar area here on the 5-minute. There's a wedge there. Bulls do see the wedge. And but bears, there's 3 bear bars and a new low, so they're probably going to sell this first pullback. So we might need some kind of a higher low, double bottom. So I like to see sellers here. See if they can sell and bring us back, because bears are disappointed. They're disappointed they couldn't get to their target. And then this bar happened. Some are buying above it. Some bears are exiting above bar 17. But there are sellers here. They want to sell and at least break even. We have not tested this area, so I didn't buy it. Like I said, I'm looking for continuation down and see if we can get that. Come on. I think I just froze the application again. I was just trying to apply a template. Give me a second. Remember, we said earlier this could be a double top neckline. So the market could try to come down to this area, but there are probably buyers waiting there on the hourly. All right, so I am, oh, the reason why I never got filled because I never had a take profit order there, so I'm just going to take my profit. So it was just keep selling. I can't really give you profit because you never added a profit order. So that's good. Yeah, because it just launched. By the way, that's not me. I don't know who Rose M11 is. Rose M. He never speaks, so when you guys when you guys are tagging me, make sure you're tagging the right person. Okay, so the bears are continuing to sell because they see this area of interest. On the 5-minute, we're already inside the area of interest, but bears are swinging for the 20 point. So the 19 point is the early profit taking. They might even test the 20, but you may want to pay yourself here. This could bounce because we are pretty much extended here. Okay, so you really need to think of getting paid here. We could bounce. Here's your 19 point. They are going to take profit soon. Even if this comes down a little bit more, it will bounce. All right, 19 point is starting zone, 20 point zone. Some machines know that they're testing this area of interest. Lows is also testing the area of interest here. No longer interested in that. So they know that this is going to bounce. It might continue to come down. This is actually pretty neat. But and then I had a measured move target right there. But again, look at the wicks. Okay, look at the wicks. If I take average, look where we are. That's a measured move target. Okay, so it's just like I did earlier. I was showing you guys that. Was it there or somewhere else? I forgot. But you see, when I see big wicks like that and a smaller body, I don't really go edge to edge. Oh, I think it wasn't here on the 15-minute chart. So here, that's another example. And especially two prices important. That's the 20-point zone starting at 19 point. That's actually 3, and then the area of interest, and then the measured move. It's better to take profit, and that's why I said take profit. You know, don't linger. Pay yourself. If it closes really strong, the bearish it might be too low to sell. So it's better to sell the pullback because it was several different important prices. It was a 20 point. You know what? Put that dog on a leash and put it in the garage or something. No distraction. Okay, so that was a 19 point. It's the starting price point. Early take profit of a 20 point. 20 point is a 3-point zone. I'm sorry, 2-point zone. Okay, starts at 19, goes to 21. 20 is the average. And it's also the area of interest, but it's also the area of interest that I marked. Okay, it's a balance zone. So it's on the 15-minute chart. But on the hourly chart, there's a congestion zone from yesterday, right? That's also a target. But really is I'm counting points here. So it's important for me to get paid. It was also the measured move target that we found earlier. Now you cannot blame this on your dog because I marked this a lot earlier. I said, if this is it, is originally I marked this and I said it's way too below the area of interest. So you could just get the average half of the distance and get yourself a much better, okay, or you could use that and get yourself a lot earlier exit. Market was forgiving there. It actually went beyond to fill everybody's orders, right? So can the bears push this to 20 point? I mean, depending on where this bar closes, there's no buy side. The bar 19 is a really nice bar, but it's a pin bar and it's a bear close. It's just a profit taking. So the bears are not happy because they were still selling into that 20 point. So they might be still selling. If this bar 20 takes out the bar 19 bar 19 low, then we get to that 20 point and we tag it. Okay, then we bounce. But there's already short covering here. If we fail to take out the bar 19 low, and suddenly, end of the 2 minutes, we fail to take that out and then closes a bull bar, we could go higher. But right now, momentum is still bearish. Bulls need a micro double bottom or some kind of double bottom. They need a bull signal bar to buy this. I don't see a bull signal bar. I won't buy it. So I'm going to assume bears are going to try to push this lower. There's a micro double bottom right now, but the bar hasn't closed, so we can easily take out the bar 19 low and then keep dipping. Now, if you measure again, 20 is right there. So we could still dip. I'll measure something here. How big was this move? No, that was just 5 point scalp. So I think the bears are continue to selling into the where I marked. This right here there's no such price point, so it should be 50. 33.50. Just be careful here. We're going to bounce to the upside. Measured move target. Now let's remeasure the actual one and see if that's what the bears are going for. They might be 33.75. That's it. That's full 20. And that's the full measured move. Okay, so the bears are like, no, we're coming to get it. Okay, then. So they sold the pullback, and they were not very happy with that. Now we're breaking this. I'm no longer interested in that. There must be something else that bears see. There are some, okay, this area. Nice swing, but this is going to bounce. I would take profit. We might bounce up to, I don't know, 41.39 area maybe. But I don't see a bull bar. I can't really buy anything. It's an inside bar right now. There is a buy zone down here. Low of yesterday is also magnet, but I would not continue to sell here. This is going to bounce. Even if it sells further down to the 41.26 area, 27 area, it has to bounce first. So it would be better for price to bounce a little bit before coming down. Let's see. Let's see if the bulls can get a 5 point here, because they know that these bears are taking profit. But we need a bull bar. They're still selling, but I'm not selling anymore. I'm actually looking for a bounce. I like to see pullback to the bar 19 low. is possibly further up to 41.38, 38.50 area. Bounce to the upside. Yep, is Gordo measured move targets met. But there's another measured move that's a much bigger one. So this could continue to come in here. It just needs to bounce a little bit because it's a 20-point and these bears need to take profit. So it might be a 2-point bounce. It might be a 5-point bounce. It might be a 10-point bounce. I like to see bulls actually grab a 5-point from here, right? So I like to see them bring the market up there at the minimum. If we don't make a new low. If we make a new low, then I'll remeasure. Minimum. If we don't make a new low. If we make a new low, then I'll remeasure. This is a good support here. I like to see much stronger bounce here. And that is around 36. Waiting for 36 to hit. It could go higher. Test of bar 19 low, but really right there, 41.36 is a 5-point scalp, a solid scalp. That's what the bulls want probably. If they close a bar above it, a bull bar, they could go to the 10-point scalp. Sellers are waiting above. I'm just looking to see if they're going to be able to get the 5-point at the minimum. That's not enough. It has to be 5-point. What do you mean, does my 1-hour fib apply? I didn't understand that, I'm sorry. Oh, you mean fib levels here? Oh, yeah. You know, we could be coming down here. The EMA. EMA is 41.26. I did say we could come down to 27, low of yesterday, a little bit below, and then look for buyers. This is a buy zone. But first, I'm looking for bulls to scalp, and they're not doing that well at all. So they failed. All they got was I think, so that's not enough. That's kind of a terrible. If the bulls are not able to get that, but they should be able to. So I'm going to mark that area anyway. If we take out the bar 21 low, then we know that's it. Bulls are not making money at all. It was just a bounce from the 20-point. We could continue to come down. So I was long, disappointed. It just came one tick close to my target, and it completely failed. So I have to scale in and buy again. As it goes higher, I'll be making money. So what you could have done is you could have scalped 2 points and then leave a runner. If your runner disappoints you, you can exit and sell. But I didn't do that. I was looking for that solid 5-point. And you're not going to get it all the time, but just waiting to see a failure here. If it fails, that means bears are going to continue to sell this into 41.27, maybe 41.28, 27, 26 area. Good swing by bears. That trend line held. We went and test and then sell. So you do have a measured move here, which we talked about, right? So I said cup, inverse cup, and a smaller cup. So that right there is the target bears are trying to reach. So it's slightly above my buy zone. Let me see. So I could take that. I don't know if I want to go all the way down, but I'll just leave it like that. Okay. is low of yesterday's magnet. What happens if we fail the close? We might even test below the low of yesterday. We have a measured move target, but the buyers are here. Now, its other magnet is the 1 hour EMA, which is also right there. And then the measured move. So the bears is, bulls made no money there other than just scalping 4 points and 3/4. That was it. So this should continue to come down, but I'm looking for a reversal soon because it is 11:30. We do have a wedge here, down, up, down, up, down, or 1, 2, 3, 1, 2, 3. Okay, so low of yesterday, testing. Can we sell this even further? Well, let's take a look. Okay, I do see something here. We're kind of reached it. We're breaking that. Or, yeah, we might actually come down here before bouncing. I don't know. There's also this. I think the buyers is there. March 6th high is support. So if you measure again, bulls are looking for a 30-point minimum. They just got it, I think. No, they haven't. But it's so close. It starts at 29. They should be able to push this now. But we're testing below the low of yesterday. I don't see a good buy signal bar yet from this buy zone. There's a 30-point they left behind. It might continue into 40-point. So I don't know if I want to buy this, to be honest with you. It might be too early to buy. So I'm not going to add to my risk. I'm still red. I could have exited out, but I didn't. It's going to go higher. I'm just not ready to add. I'm looking for a good buy signal bar. Bar 22 is not a good buy signal bar, so it will probably going to continue down. So I have to sit here, and that's the beauty of trading with micros. I'm trading small because I already made most of my P&L here. I wanted to see if I could get a 5-point there. Failed, so that means bears have still room to downside. But we do have nested wedges. And many bulls bought stuck there, so they want to bring the price up there to break even in case this comes down further. They might be buying here, but I think it's too early because there's no good buy signal bar here yet. And you don't have to scale it, but beauty of trading with small and especially micros is you end up, actually it's just fun, but you just got to know when to add. You can't just add blindly. All you would do in extending your losers, right? Adding to your losers, and that's not good. All right, so you can see that bulls are trying to reach the bar 21, and they did. But I did not add there because by the time I add, I don't even have to add. It's going to go higher. I don't have to do anything. It's just going to fix itself anyway. I'm just going to wait for it. I don't count like that. It's Zzw. I think that's you. 82 ticks from high of day? You could, but we already measured it. Because bulls made more than like about 10 points there, so I measured from bar 14 high. We already made 20 points, right? So that's 80. That additional 2 ticks is you're opening your trade and closing your trade, so that's where it comes from. 82 is we already made that. Okay. Now, if I'm gonna measure it all the way from there, I'm looking for a 40 point. So that would be a lot more than 80, 2 ticks. So we could still come down to here, but bulls did make money here by buying above 12. So I can't really measure from there anymore. That's the trend I measure. And we already made 82 ticks. I'm looking for extension. There's no good buy signal bar here. So therefore, bear's probably going to bring it down to here. Let's just wait a little bit. Oh yeah, you've been asking for NQ. It's the same thing really. So you have bear flag in a way or we started here. They sold right there. No bull bars closing above. So they sell confusion. Up is down, right? On the NQ, it was a big up, big down, lower high. It's a cup, another cup, inverse. Okay, so inverse cup, handle. So measured move targets, perhaps. Can they sell this further down? Impossible. Or this is how I would measure. There might be a little bit more space to the downside for bears. Okay, so they're in a breakout mode and they broke down inside bars, meaning it's pulling back into the breakout area and looking for sellers to continue down. Could this be let's take a look. This is, hold on. I want to change this because this is ETH. You see the gap here? Okay. Let's put this aside for a minute. See that right there? Impulse, pause, impulse. That right there is your buy zone. And they bought it. Now, it's going higher, but there's cup, handle, and it's sold. Now, they didn't really, I don't have enough, hold on. They're buying here because this area is a buy zone, but I'm not so sure if this is enough. Okay, so this is still the target for bears. In fact, they might even get this as measured move. I don't know if they're going to be able to push down here because there's another buy zone right there. I'd be more interested in this area. Okay, so let's see. There's a gap here. Right before that gap is the measured move. If they're going to continue this, that's a measured move. This is the conservative measured move. I like to see bears push this further down. In fact, break this area and coming to this area. They're bouncing because it is a valid buy zone. It's the first touch. Anybody who bought with this bar failed. So they're buying in this area and they're trying to get back to their original price. And the same thing is happening on S&P. But S&P, those bulls who bought with 21 kind of broke even, but they need to get to up here. Inside bar is 23. Within the buy zone, they might have bought above it, but I prefer market to come down a little bit more, and then buy. So I don't know if I'm okay with this. I like to see another push to downside. Machines see a wedge, so they're buying, but I either need to see a momentum to buy, which is, I don't see it yet. 23 and 24 is not enough. I like to see at least come down another leg, small. But if we start to see a momentum, then that's fine. I'll add and I'll be making money soon. Either way, I'll be making money. It's just that I like to swing this. I don't think that it's ready yet. The same with the NASDAQ. If 25 closes bullish, then that's momentum, but still sellers probably waiting up here above bar 22 or the high of 22. So I don't want to buy this just yet. I prefer a double bottom of some sort. There's a 30 point that bears left behind. So they're going to sell, right? So let's see if the NASDAQ can push this further down. There's a measured move target left behind. There's 30 point left behind. I need to see a much better buy signal bar. So I didn't buy above. If I were to buy above 23, I would have already broke even and be exiting out. It's going to go up. I just don't want to buy it right now. And my losses are so tiny, it just doesn't matter. I just want to add in the right place. Then I'll be compounding rather than waiting for this to come back again. If I were to add here and this turns around, now I'd be losing a lot more. So I have to be patient. I have to give these bears a chance to bring the price down, and then I look for a trap and a second entry long. That one I will add. Not only I'll be making breaking even, I'll be compounding with other contracts I add. So I just have to wait, be patient. Bulls trying to stay above the low of yesterday. They have to keep the bars above it. And we need a second buy signal bar here. These are no longer, sorry, every time I delete them and application crashes, it just rolls back to the old version that is stored in the database. So that's why they keep showing up, even though save the. So the double top neckline, bears took out that neckline. Can they continue to sell? They have to pull back a little bit, make a bear flag, and then they can sell into right there. But we need to pull back a little bit. Okay, so we need to, and we're also bouncing from the EMA on the 1 hour, but we have not tagged this. Now, this is not accurately calculated on Ninja, not as accurate as Albert says on his chart, because he doesn't trade in Ninja. But if I use this, that's the 200 EMA, just about the same area. It's a magnet, so I'm going to keep it as is. Basically, this should be the one identical. So we have not met that 5 minute. We have not tested that 5 minute. Actually, it's a 60 minute 20 bar EMA, but you see on the 1 hour we already tested. So there's a discrepancy there. See, I didn't buy above is again repeating 25 because I need some kind of a double bottom, some good buy signal bar. I don't see it. I didn't buy it. And I assume bears are going to push this down a little bit further. If we start to get a nice bull bar, that will be a second entry long because bar 25 went below the 24 low. Okay, so suddenly we close the bar 26 bullish. They might buy. That would bring me to my break even. So that's nice. We're probably going to test 33.75, 41.34, maybe 41.35 area. Or the 22 high, bar 22 high, and possibly 21 high. Let's see if bulls can push this. Or they're going to take profit as early as 34.25 and be done. And then this can come back down again. But they need to close this bar high, so there's 1 minute and 55 seconds left. Bulls need to continue to push this bar and close it as high as possible. And that's the second entry long. The problem with the second entry long is that you end up buying above 25, and that's not really a good buy, okay? Because it's a bear bar. So it's better if the bulls can close a bull bar here, then they can push this to 34.25 at the minimum, but they might actually test 41.34.25 to 41.35 if they can close this bar and get a second entry long here. If it fails, then we come down to the 30 point. So you just have to wait. Buying above a bear bar like 25 is never a good idea. It closed bearish. It's a bear trend. A leftover target, so I don't like to buy. I need to see the signal bar. I need to see bulls doing better here and closing a bull bar. Doji doesn't cut it, but Doji is not also a bear bar. So bears are disappointed here with bar 26. They might exit out if this bar now takes out the 50% of that Doji. Better if the bulls can finally close bar 27 on its high above the midpoint of Doji, especially the open of 25, bar 25. So if this is a second leg failure right there, and also bulls didn't make any money because not a good place to buy above a bear bar. It's a mess here. So bears see a double top bear flag, but 26 it's a bear bar on the micro, but it's a doji on the E-mini. So maybe it's better to wait here. You don't see a good signal bar here to buy. The second entry long has not yet set up. Bears are trapping the bulls buying above strong bear bars because they still want their target. But something else is happening here. What did I say earlier? Is we're not closing at bear bars below low of yesterday. That is holding still. That means something, right? So that means I'm looking for a second entry long. Now, could this be a second entry long? Yeah. So let's see if they can close this bullish as possible. Then we go test the high of 22 We might even test maybe 10 bars, 2 legs, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 to the EMA. I don't know. It's tough. Difficult to buy something that is not showing you a good entry. Bears trying to sell. They see a double top, 24.26, and a lower high, 27. They want to take out the bar 22 low, get to the measured move target, get to the 30-point target, get to the magnet below, or the magnets below. There's a breakout test right there. It's coming from there. So that's what they want. They want to push this further down. Well, one thing that's going for bulls is that no bear bars yet below low of yesterday. Still holding. So bears trying once, bears trying twice. If they failed with the twice and then suddenly we get a bull bar, we're going to go higher. If they close that bear bar below low of yesterday, expect continuation to downside. Below low of yesterday, expect continuation to downside. Bulls want to start a swing here, but it hasn't set up yet. Remember, we have a bunch of wedges, wedge, wedge, wedge. They need a higher low and a trap of the bears. Then they might start a small pullback bull trend somehow, but it hasn't started yet. Market is still bearish. Okay, so now we have a second entry long, 27, and it's a form of a reversal, failed second leg, and the bulls are trying to bring it up to maybe 10 bar 2 legs to the EMA. So I bought above bar 27. And I am about to break even. I'm just trying to make money. So, I mean, it's over to break even, just trying to make a little bit more. So I'm expecting 34.25 to be tested and then 35.25 to be tested by bulls. Then we could continue perhaps higher. All right, so 34.25 tested. They actually tested 34.50. Some machines scalp there, but they don't have to stop there. Most likely we will test 35.25, but this bar has to close bullish. Can we come back down one more time? I think it's best that we test the 35.25 first. And we may not, actually. We could go higher, but it's just depending on where this bar closes. Bulls are trying to swing and get a 20 point from this. So they bought above 27. 10-point scalp is at 35.25. We will pull back from there. This is a trap, and we might actually trap for basically bears are trapped here. We might come back down and then go. Bulls need to swing this, but they haven't really gotten their 10-point. So I need the 35.25 test. Come on. If we close this bar above 41.35, we could go higher. Bears want double top and a failure. If that failure is going to happen, it has to happen at the 10 point. So we kind of tested the 10 point zone, but it's not, I don't think it's enough because buying above 27 is the second entry. So it's better that this bar closes bullish. Let's see if they can make it. If they fail, then we're not ready yet. And the bears see double top bear flag, but it's kind of, I don't know if I want to sell this. They're taking profit because they reached 9 point an extra quarter. It's kind of, it's a bad deal for bulls because they could have easily get to the 41, 35, 25, and they will. It's just that this is bearish. We're below the EMA. Bears are trying to sell because they're disappointed. But they had a chance to sell here, and they kind of failed with 26 and 27. And the bulls trapped the bears with 27. They have to close this bar on its high. If they fail, then bears can sell. So it's small pullback bull trends. They don't start easily. It can take time. But look what's happening here. It's 2 bull bars, bear bar, and the bulls bought it. 2 bull bars, here's another pullback bar. Will the bears buy it? Or is this going to fail? To me, bulls already made an effort to get paid at the 10 point. They reached their 9 point, so I'm no longer interested in this. Remove that. They slowly started to buy. It's 11:30. We have a bunch of nested wedges, so they might be trying to get up to here. That would give them a wedge bear flag, and then perhaps sell. We have a nice double top, neckline, break, first bear flag, second bear flag, and they need a third bear flag. Generally, the third bear flags are 1, 2, 3 in a large, and then we could sell. So it would be better if the bulls can actually bring this market higher than the bar 28 high. Okay, so then we would look for a wedge bear flag and then try to sell it. Okay, so I don't assume that the bears are going to start to sell right here. I think bulls are going to try to push this a little bit further. They're still in their 10 bars, 2 legs set up. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And then wedge bear flag would be a much better setup to sell. Okay, so this is a swing. And here's your first flag, second flag, and this is the third flag. And it's forming. It's really not yet set up. So I expect bulls to push this higher. Bar 22, yes, of course it is. It's housing 1, 2, 3, 4, 5, 6, 7 bars. So if you're a bull, what are you looking for, right? So you measure it. You're looking for bull bars closing above the midpoint. No consecutive bear bars. Bears are not going to come down and test the low. But we have consecutive bull closes. That's because bulls want to test the high of the mother bar, which is outside bar. And then they want their targets above it. Okay. I don't care for this anymore. It's difficult because it's bearish market. We still have some areas left behind. But this is not a good double top setup because the sell signal bar is not that good. Bears need at least a really good bear bar closing. Could be a trap, but I don't know if this is good enough. If this was a bear bar, that would have been a different story. It's just bar 28 is not a bear bar. So I have to wait for bar 29. It's a limit order market. It's 6-7 bar is limit order market. So they're selling as bars go high, they sell. Bars comes down, they sell. I'm sorry, they buy as bars come down, and bars goes high, they sell. But I'm expecting for a third push, preferably testing the 28 high. Now bar 29 is a bear bar, but it didn't close all that bearish to sell, right? That's because bar 28 was not a good sell signal bar. So I want to see if the bulls can push this higher towards the EMA. If the bears take out 29, then they might be seeing a double top and a trap, bull trap with 28, and then sell. But they have to show us a bear bar. When these flags are setting up, these are the things that I look for: traps, and then is good sell signal bars. Or for bulls, okay, is good traps, bear traps, and good buy signal bars. All right, so if I don't see it, I don't touch it. 28 is a bear trap, bull trap, but bulls are trapped here, but where's the sell signal bar? We need a good bear body. So when you don't see it, you can't just sell it. You have to wait. Because if the bear, okay, if the bear flag is not ready yet, that means it hasn't made its third push up. So basically what the market bulls see, first entry, second entry, they're trying to get the third entry to go higher. So, and they're struggling. Okay, now bears are taking out that 29 low. They're trying to take out the bull bars low, 27 low. Now they're getting serious about their bear flag. But will they be able to sell the second leg down? First try, second try, they've got a 10-point target right there, starting at 41.2550 to about 24.50. If they test this and start to bounce, if this becomes a failure, we can still bounce. But now that's kind of a flag. Okay, so double top, lower high. Now they're trying to take the 22 high. Now that's decent, but they're about to get the 10-point. They have to close this bearish now to come down to here. What if they fail again? What if this bar fails to close bearish enough? What would happen? That means bears cannot get their 10-point. Not only they cannot get their 10-point, they would fail to close a bear bar below low of yesterday. That will be their second sell, and then they would fail with that, and suddenly we would get a bull bar. Now, I don't know that. This is right now proving to be bears trying to sell this as a bear flag. And they're trying to get a breakout. Bulls are looking for a double bottom. They kind of failed. That bar right there is going to discourage them. So what happens to swing? It might be failing, especially if this bar now closes like this. It's going to try to get continuation. All right, so bears reached a 9-point. 10-point is a little bit, just a point down, 24.50. Oh, they just reached it. Okay, so that should bounce now. That's it, it's bouncing. See how the bears are now taking profit right there, 10-point? If you actually measure 10-point. Immediately touches and bounces. Now what? Can they continue down? Bulls need a good buy signal bar and trap this leg down. If the bears get trapped here, we have 1 tick failure below the 22. If we start to get bull bars, okay, and this is a second leg failure, then they can turn it around. But we made a new low. We took out the 22 low. Now, in order to trap these bears and make this a failed breakout, bulls need to close this bar as bullish as possible. Reject bar 30, and next couple of bars get above bar 30 and get to the EMA. If they fail, bears get their breakout of this bear flag. That kind of formed now early. Double top, lower high. They're still trying to come down to here. So it's not ready to swing or reverse yet. Looking to see if this breakout is going to fail. If the breakout fails, then yes, we can finally reverse it. Brad will join us, so everyone, please stay in your webinars. Don't sign off. He will take care of the afternoon. We need a second. We need a good bull bar here. For bears, we need continuation. We need to take out the 22 with a bear bar. Then we will continue to sell. But it's trying to make a decision here. So the bar 31, basically nothing but a profit taking, is from this 10-point move down. So they sold, that was the first entry sell and second entry sell, and they're taking profit. But where are the bears? Is this going to break out? They just need to close this bar bearish. Two consecutive bear bars below the low of yesterday can still continue to sell. I got my break even with the 28, so I was safe there. A majority of my accounts broke even, and I left a runner. Hope that we would get that 2 legs up and get at least that third push and a wedge, and then sell with a bear flag. But that didn't happen. So I just have to be patient, waiting to see where this bar is going to close 31. Bears want to close it as bearish as possible. Break below the 41.2350 and continue to sell is another 5-10 points, but I don't see it yet. Bears got 25 seconds to close this bar on its low to accomplish that. If they fail, we could get a failed breakout. Good follow-through bar is 31. The only problem with 31 is the body did not close 1 tick below 22. But it is a follow-through bar. I just don't know how bearish this is. It'll probably going to continue, but how far can it go? There's a magnet here. Probably buyers waiting there. There's a magnet here, but not being able to close that 31 body below 22. But it's still a breakout. So you have a 30, broke this structure, continued, closed a really nice bar. Now bears did the work, failed to close that body, but still they took out the 22 low. So it's still grinding down, but we're going to get back up to here. Okay, so I'm going to sign off now. We're going to get back up to here soon. I don't think we have too much space left to the downside. We have a couple of magnets there. They're still pushing. but the buyers might show up soon. Next bear scalp target is at 2150 to 2050. They just need to close the bar on its low, as low as possible. Then this could quickly come down. Since there's 2 minutes and 50 seconds, bears might actually reach the 2150 to 2050 very quickly. Doesn't need to close bearish to reach those targets. Okay, I am done with my session. You guys have a good day and see you guys. Let me check something. Tomorrow is Tim Stout, and I will be back on Thursday afternoon. And then Thursday morning is Tim Fairweather. Okay, so I'll see you guys Thursday afternoon around 1 o'clock. Bye, everyone.
I'll share my screen in just a moment, just fixing one thing. Okay, so clearly always in short. And looking at the daily chart, we can see that the bulls are taking profits at the trend line. I said in the pre-market report that we were probably going to pull back. This is just too much. It's gone up too far, and you'll have profit taking up here. Give me just 1 second here. As always, feel free to ask questions along the way. So we're always in short, and we've got open of the month. That's the screen line. Some of my lines got deleted. When I switched computers here. So let me add a bar counter. So what do you do here? Well, it's always in short and small pullback, bear trend. It's okay to be short. We have not touched the moving average in several bars. And therefore, we're probably going to touch the moving average at least soon. 33 is a warning that the market may pull back soon. But when you look at this, we're probably not going to reverse up here. Touching the moving average after we spent a long time away from the moving average. On the open, I thought it was a very interesting open. So the market, we had 3 big bear bars on the open testing the moving average, and it's strong enough. You already, going into the day, my thoughts were we would not have a bull trend day. I didn't know if, we would close. I thought maybe we would close above the open, but I thought pretty decent chance we would get a close below the open. And bar 2, reasonable sell, but then tight bull channel. 3, big bear bar, closing below the moving average. I thought the odds were we would get a second leg down. I did not think we would go to a new high, but this happens pretty frequently. If you think about a 15-minute chart, bar 1 is right here. In the market, it's a big bear bar. The market went above it and then sold off. So the point is, I thought it was reasonable for the market to get a second leg down after the sell-off, even if we got to a new high. And it's basically a second failed breakout of the high of the day, which was yesterday's high, which is right there. So we broke above yesterday's high and reversed down pretty sharply on 10 and 11. Now, at this point, you'd think about a double top break below the neckline. So always in short, deep pullback, testing the 10 closed, and we've been channeling down ever since. But clearly, always in short. And when you look at this kind of sell-off, it doesn't, when you see the big bull bars, it's deceiving because, it's easy to get trapped into buying, looking at this and saying, oh, it's a wedge bottom. But when you look at that, is it really a wedge bottom? Do you really want to buy after 10 and 11? And then do you really want to buy above 17 after 14, 15, and 16? Of course not. Now, what are traders doing down here? This is probably profit taking by the bears. The risk is getting big, stops up here, and traders know, when you think about it, what's the odds, what's the probability the market's going to go all the way down to here before we pull back to, maybe the breakout point? The reality is, if you buy down here and put a stop down here, you're probably going to travel somewhere up to here before you get stopped out. So you will have bears buying back shorts and bulls buying to take profits. And that is what's happening on this chart right here. So a little bit of a surprise on 35. If I was short, what would I do above 34? I would probably exit a point or two above 34. High pair channel, yes. But to me, we'll probably get a couple legs sideways to up. And it's okay to stay short, but I think the problem is if one is staying short, I think the stop is all the way up here, and better if one can scale in. Yesterday's low will be a magnet. You will have some bulls that bought this blue line, which is yesterday's low. Some of them made money here. Others bought again and scaled in lower. So to me, strong enough bar, probably going at least a little bit higher. But with the micro channel since 28, the upside, it's probably going to be a minor reversal. But I would not be shocked at all if we get back to yesterday's low, which is why I mentioned most traders should be flat and out of shorts. All right, so this is what I was talking about. Big bull bar on 35, and we're getting back to yesterday's low, this blue line. Bulls started buying down here, betting that we were going to test back in this area, and bears started buying back shorts. Probably going at least a little bit higher into the blue line, which is yesterday's low. So far, strong enough reversal that the first reversal down will probably fail. So I would be out of shorts here. Better to wait for a few legs up before looking to sell. Target for the bulls is the top of the third leg, which is the 28 high. First target is yesterday's low, this blue line. Second target is bar 28 high, the top of the third leg, as well as the moving average. Consecutive bull bars, that is enough buying pressure for me to not want to sell the first reversal down. And if I don't want to sell the first reversal down, that means that traders will probably buy betting on a second leg up. So, you can look at this and say we haven't touched the moving average in 20 bars, and that's true. But for me, I really am not all that interested in selling at the moving average when it's following a big bull bar, 35 and 36. To me, this looks like a reversal up. Now, how far can we go if we get a reversal? We can go a long way, but the reality is it's a fairly tight pair channel, and the first reversal up is going to be limited. Lots of bear bars on the 15-minute chart, one bull bar. So I think probably going somewhere from here to here, so probably going to go somewhere up here, but we can go much further than what seems reasonable. I still think even if we get to 31, 41, 35, which is the top of the third leg, probably going to go sideways. You can see some selling and profit taking at the moving average, as well as the blue line, yesterday's low. Let me just make a note. So there's yesterday's low. But for me, this is strong enough to probably for me to expect at least a small second leg up. Tested the moving average, 60-minute moving average here. And you can see in the final few minutes of the session, we reversed up. That's pretty common. Whenever you get a bar that's about to close, it's common for the last 10% of the bar to do something drastic and make the bar look different. We see that all the time on a 5-minute chart. 4 minutes into the bar, the final 60 seconds or even sometimes 30 seconds will drastically change the appearance of the bar. And you can see 36, this red number, the red numbers correspond to the 60-minute chart. So every red number is the close of the 60-minute bar. And you can see 35 and 36 put a big tail below the 60-minute hour. Probably going to try and get a bear bar here. I'm going to turn on the second counter. I'll let it load really quick, and then I will share my screen once again. There's the second counter. What about selling below 37, betting on a double top with 31, 37? Probably buyers below, and therefore I think bulls will buy below and scale in lower. The bears want to trap the bulls, but I think the bears will need a second entry sell. In other words, a micro double top after 35 and 36. So to me, I think there are probably more buyers below 37 than sellers. You can see some traders using the bounce or the sell-off to buy back shorts, other bulls using it to buy. That's why 50% pullbacks of breakouts are pretty common. Or, in other words, deep pullbacks of breakouts. And the reason they're common is typically, in this case of an upside breakout, you get trapped bears selling down here and scaling in higher. They get disappointed by 35 and 36. And they use the pullback to try and buy back shorts. And it ends up being around their break-even price. Other traders, maybe they sold the 34 high. Right here, they sell this high. They sell more below a bear bar, 37. They're disappointed, 35 and 36, and they get out break even. Are we always in long? I think we're temporarily always in long. We're still below the moving average, so it's not ideal for the bulls. And, I say that we're probably always in long, but it may not take much for the market to become always in short. I think right now we're in a trading range, though, and the market's deciding where the top of the range is. So probably going to get closer to this area. At a minimum, probably the apex. So I think we're going to go, somewhere around here, 41.30. Bulls need to break above the moving average, though. But right now, probably going to get the second leg up from 35 and 36. The second leg doesn't have to be that big. I think the second leg's probably going to be, somewhere right around here. Bears made money selling the 38 high and scaling in higher. So that is a sign of trading range price action. That is a sign of trading range price action. The reality is there's probably bulls buying below 39, especially if it's a bull bar. Big bull bar on 39. And the bears want a second entry short on 40. But with 39 being as big as it is, I suspect it's a little bit of a surprise, and we'll probably go a little bit higher. If you're a bear and you sold below 37 and you scaled in, maybe you sold more above 37, what are you thinking here? Are you disappointed on 38? Excuse me, are you disappointed on 39, the big bull bar? I suspect traders are. Traders sold, scaled in, probably disappointed, and may try and get out break even. So I think probably going to go at least a little bit higher. We'll probably come back to the 37 low, but we could easily go all the way back up to the 28 high before we get down to the 37 low. So always in long, yes, but always in long within a trading range. Therefore, probably not going all that higher. It's more likely a minor reversal. Trends transition into trading ranges. Just like this rally we had over the past few days is transitioning into a trading range. We're probably doing the same here. We had a bear sell-off, 2 legs up, and we're probably going to go more sideways. Now, what do you do if you're a bull and 40 closes like 37? Well, it would be a second entry short at what could be the top of the trading range, the 20-period moving average. And I think that will entice traders to exit. So for me, if I'm a bull and I'm long, and this current bar closes on its low, especially if it closes like 37, I would probably get out and wait for a few legs down. What about selling? To go short, betting on a test of the 34 close. We may have to retest the 34 close. Trader, it was reasonable to sell the 34 close down here, but to me, a lot of buying pressure through here, and that makes me think this might be the first leg of a complex pullback. So maybe leg 1 to here, and then a small 2-legged pullback, and then leg 2. So I am suspicious about selling below 40, especially after 39. For the bulls, they see it as a pullback, 40 and 41, a pullback from the upside breakout on 35, 36. But the bulls really need to break above the moving average here. Otherwise, probably more sideways. I still think we have to get to the apex of this triangle and the 28 high, the top of the sell climax. So it's possible. You can argue 40 is a second leg from 35 and 36, but it's pretty common to get a breakout 35, 36 and a small first second leg like 39 and 40, and then a deeper pullback and then a larger leg up. So it's basically a rally, a 2-legged pullback, and then a bigger move. So I still think probably going a little bit higher. Now, why not just buy at the market right here? You probably can, but the risk is if we break above the 40 high and reverse down, we could test all the way to the 34 high. So it's not that easy of a trade. You're buying into resistance. We know there's resistance somewhere up here. And the question is resistance at the moving average? Is it at the apex of this triangle, which is basically right here, call it 30, 41, 31, or is resistance at the 28 high? So it's a question of risk reward. If you buy right here, or if you're long, where's your stop? Is it below 38? Well, the problem with putting a stop below 38 is if you sell out of longs at the 38 low, you're selling probably where bulls are going to buy. Bulls will buy it betting on a double bottom. And that's kind of the same thing with 35 again. If you're long, do you really want to be long and then get stopped out below 35? Of course not. There's probably more buyers below 35. It's the same problem up here. If you sell the close of bar 3, do you really want to exit at the high of bar 1? So if you sold here and your stop was the high of bar 1, it'd be at 61.25. The market went to 63.25, so it basically went 2 points higher and then sold off. That happens to traders all the time. And that's the problem with using, it's basically a skunk stop. And that's what makes selling here or buying here rather difficult. I was long during 39 and I exited. I went flat 5 or 10 seconds after the 40 closed. And the reason was I was willing to hold for a second leg, but when 39 closed as a big bull bar and then 40 failed to break above the moving average, to me, I'm no longer willing to hold. I don't want to be, and part of it is because, and the main reason is position sizing. I think we're going up to here. Regardless of if we get to a new low, I think we're going to rally to the 28 high. My problem with that is I don't want to be stopped out somewhere down here. If anything, if I'm long, I want to buy more down here because it's a trading range. You know, it's probably not going to go all that lower. So if I am long, maybe my stop is at a minimum, it's probably somewhere down here. So I would rather just wait. And I know that's a challenging concept to think through, and position sizing, but that's why you hear Al often say 90% of the time the market is in a trend or in a trading range. And what he's saying is 90% of the time breakouts have deep pullbacks. So I would not be surprised at all if we test all the way back down to the 34 close before we get up to here. Now the market's forming a triangle here, 40, 42, and maybe this high, and then 38 and one of these lows. So it's a small breakout mode pattern. It's a triangle just below the moving average. I think it's 50-50. And again, just to reiterate the point, if I'm long for any reason and my stop is below 35, I have to ask myself, what is the probability that the market's going to go to here before it goes down to here? And think about where the market's at right now. We're basically in between two important price levels, the 28 high and the 35 low. So we're going to go to one or the other. I think the reality is, you know, we may end up going to both, but I think that, to me, I'm not interested in selling here because I think there's too much risk of testing the 28 high. So I still think probably always in long. The question is how deep of a pullback. I say that because even if we get a downside breakout somewhere down here, yes, it would be always in short, but it would be always in short at the bottom of the trading range. It'd be like selling the 32 close. You may get one or two more bars, but if you're not quick, 35 could easily reverse up. Good bar for the bulls. You know, is it a buy above 43? You can take it for a swing, but I think the problem with it is it's buying in a tight trading range. Obvious magnet above, but it's forcing traders to buy fairly high at resistance and forcing traders to buy at the moving average. So I think a lot of traders that would buy here, I suspect they would be fairly quick to exit if the market does not quickly go their way. So some traders will buy above it, and we can see it triggered here. And yeah, there's a few ways to handle it. Some traders, they just put their stop below 43, and they just wait for the bar to close, and if the market reverses down, stops them out, oh well. Other traders will buy above it and, you know, maybe give the market a minute. And if the market doesn't race up quickly, they will exit the trade. Now, why would they exit the trade a minute or 2 minutes into the bar? Well, the reason for that is if you're buying high at resistance and you're buying on a stop entry, you're basically buying a breakout. You're hoping that you're going to get swept into a breakout going in your direction. And if the market does not do that and it stalls for too long, then that means that may change the premise of the trader's premise. So kind of like right here, we're about 45 seconds into the bar and we're starting to break to the upside, so that's good for the bulls. And I think traders do that pretty regularly. They'll buy a stop entry and they'll be pretty quick to exit if it doesn't go their way. And that is why, give me just 1 second. Give me just 1 second. I took that trade. I bought above the prior bar and I just took part off, and I'm holding the rest to see if we get to the 28 high. That's why I stopped talking for a second. So what is the risk for the bulls here? The risk for the bulls is that it's a trap and we reverse down, and that would basically be a wedge. It'd be a wedge with 36, 40 in the current bar. You can see some traders, they sold the high of 42, maybe the high of 40, any of these highs, they sold and they scaled in. And those traders are deciding what to do here. So traders, they sell the high, any of these highs, and they're disappointed by that first 60-second bar of the current 5 minutes. They're disappointed, so they scaled in. And this is probably pretty close to break even on the entire trade. They sell this high. So let's do like this. They sell this high, they sell more. You know, if this high is 8 even, maybe they sell at 30 even, which is basically this line, and break even right here. So traders are deciding, are they disappointed enough on the trade that they're willing to just exit the trade entirely at break even minus commission? Or are bears saying, it's a trading range, it's probably going to pull back and close the breakout points, I'm going to buy. I just went flat. It's taking too long for it to race up. And this is what I talked about. I don't want, you know, if I'm buying above a stop entry, and it still may go higher, but if I'm buying above a bull bar like 43 at the moving average at resistance, I do not want the market to allow other traders to get in. I want the market to trap traders. You know, it's like this. If I'm buying 35, I want the market to race up. Even here, the market pulling back to 38 is a sign of weakness. So look what's happened right here. Everybody that sold the high of 42, the high of 41, made money. So why did I exit the trade as the market was stalling? It's because of this reason. For me, if I'm taking a stop entry that is lower probability, especially high in a trading range, I'm not going to let, you know, the stop below here. I'm only reserving that stop for if the market just triggers the buy and immediately goes down and stops me out. If it goes up and starts to stall, then I'm out of the trade. Why am I out of the trade? It's what I just talked about, and that is you need strong trends trap traders. I want to pull up a chart. I'm going to stop sharing my screen. I want to pull up an example of the chart I have that shows this illustration pretty well. Now, there's still probably buyers below the prior bar, but remember what I said about being long right at the moving average. My problem with that is I don't know where the bottom of the range is, and the bottom of the range could be the low of the day. So for me to stay long, I would have to buy more at the low of the day, and I'd rather just look to buy at the low of the day or wait and see what the pullback looks like. Give me 1 second. I'm going to try and find the chart. I'm trying to build a list of just a large reference of various slides and examples. You know, I think it's really good practice to try and build your own slides and examples of charts, because it forces you to think about the market. I know I have this slide somewhere, but just started making it over the past month or so, and I do not have it categorized like I would like. Give me just one moment. Let me do like this. I'll see if I can find it on my other computer. So you can see this chart. This was November the 8th of 2022. And on the 5-minute chart, we basically formed a double top. And you can see the sell-off right here. Look at the 1-minute chart. You can see there were virtually no pullbacks during the sell-off. So any bull that bought this low and scaled in they were just quickly punished. They had no way to exit the trade at break even. And because of that, it started triggering all sorts of stops. So let me go to, I want to actually show that chart. So here was that day. And you can see we had a bull trend line break, basically a double top here at 12.15. And the low of this entry price was $29.50. Let's find $29.50. So here is the entry price. You can see the bull that bought this low, this was the entry price. So bulls bought the low on the next bar, which is this bar right here. And you can see that market triggered the buy and it went up. Triggered the buy and went up maybe 1 point. Let's see, 29.50, 30, 25. So it did not even go up 1 point. So if you bought this low, you tried to make a point, you got trapped and it went straight down. So imagine if you scaled in. You know, this probably happened in 15 seconds. This is a 1-minute bar, and it didn't slowly go down in 1 minute. It probably went down rather quickly. So remember what I said about how often the bar forms in half of the time, or it quickly changes. So this could have happened in 20 seconds. But if you bought more lower, look at these 1-minute bars. You never had a chance to, you know, even if you bought more here and then you get a follow through bar, you tried to get out with a smaller loss, it only went up a few ticks. Here, went up 1 or 2 ticks, sold off. And it did that for, you know, an incredible number of points. The low right here was 29.50. Here was 13. So what is that? 17 points. And you can see the pullbacks are really small. That is what traders want to see if they're taking a stop entry. So if I'm taking a sell, I want the market in 1 minute, 2 minutes to just race down. Otherwise, it's probably in a trading range. Bulls will trigger the buy and will break into the upside. Typical trading range price action. It's a bad sell below 44, so bulls bought it. Getting vacuumed up to the targets, probably going to get to the 28 high. So what do you do here? Most traders probably better off being flat. I get the logic. You know, one can argue that we're getting a bull breakout of a trading range being this area in here. So we're breaking out of this range, and that is true. But we're probably not going all that much higher before the market starts to pull back. Bull breakout, 46, but bad follow through, 47. We may go a little bit higher, but probably we're searching for the top of the range. And because of that, the market is probably going to start to go sideways soon. Bears made money selling the 44 high, scaling in higher. Say that. They sold and tried to scale in 2 points higher. They were not able to get out. I still think the market is trying to get to the 28 high, the top of the final sell climax. What about the possibility of a measuring gap and a measure move up, maybe the 38 low to the 44 high? That's possible. But right now, I think probably more sideways. I think the market is searching for the high. This is a breakout on 46. You have to wonder if this will lead to a measuring gap, and it might. If we get a strong breakout and follow through, we could easily get all the way up here. So it is important to be mindful that we do not have to stop at the 28 high. We had lots of bull bars, reasonable bull bars in here, lots of buying pressure through here. And that makes me wonder if the market will have to try and get back to the 16 low, which is up here. So if we get a strong breakout, or if this bar is a follow-through bar, closing on its high, that will increase the probability that this is going to lead to a breakout in some kind of measure move up. That's fairly common in trading range days. Here, although we had to go sideways for several bars, we basically broke out of a bear flag. That's what major trend reversals are. Bear flags. A major trend reversal is a trading range. And, if you think about it, a trading range is a major trend reversal, which would be the reversal, and then a trend continuation pattern. So here we had a double bottom, higher low, major trend reversal with 54. Bears wanted some kind of double top and a break below the neckline and trend continuation down. Here we had, I'll talk about, that's good for the bulls, and that makes me less interested in selling here. Makes me think that the market may try and go higher. But anyways, we had a lot of trading range trading here and then a breakout. It's possible it's a bear trend, small trend line break to a lower low, and this is a major trend reversal. Although I do think that even if we rally up to here, we're probably going to get a deep pullback. But I would not be surprised if the market tests all the way back to the March high. Some traders would buy above 17 and buy more above a bull bar, like maybe 35, and we're right at break even for them. Other traders, maybe they bought above 27 here, and that is break even. So possible third leg up, first leg 37, second leg 44, and the third leg being 47. But to me, when I look at 46 and 47, if I sold to close at 46, how would I be feeling? I would be fairly disappointed. And I might be trying to buy back my shorts back at the 47 close. And that could be what's going on right here. So for the bears, they want a reversal of 47. Some traders will see the tail on 47 as the first leg and then a pullback in the second leg. So on a 1 minute chart, leg one, pullback, second entry short. But my problem is 46 and 47 are strong enough to probably get their own second leg up. And because of that, that makes me less willing to be interested in selling right here. So I see 46 and 47 as a strong enough surprise for at least a second leg up. Some bears, they sold the 44 high and more higher, and they're deciding what to do here. So if you sold the 47 high, 31 even, you sell more, 1 or 2 points higher, maybe more at the close right here. So 31 even, and then 33 even. So basically, if you sold here 2 points higher, which is this close, the market went up one tick and then turned down. What does that tell you? That tells you had a lot of break-even traders. Traders sell this high at 44. They sell more 2 points higher. They needed the market to fall to 34 even. I say that. They needed the market to fall. Do like this. They needed the market to fall to 32 even, and the market went to 32.25, so it did not let them out of break even. So it's possible this is an endless pullback. What are the odds that we get a measured move from the 35 low to the high all the way up to here? That is possible as well. But right now, I think it might be buy the close for a small set for at least a second leg up. But the bulls that are buying up here, they need a strong breakout. Breaking above the moving average, so that's good. Bears tried to hold at the moving average and they failed. So the moving average, any pullback to the moving average will probably, at least temporarily, act as support. You can see we're right back to the open of the week and open of the month. Weekly chart is neutral. The problem for the bulls is the market is not spending a lot of time above this close. It's basically spending most of the time below the midpoint in the bar. So tail below the bar, not good for the bears, but disappointing for the bulls. Some bulls will buy the 47 close and they'll be disappointed on 48 and they'll look to exit. Other traders will say 48 is not strong enough to reverse 46 and 47, so probably going at least a little bit higher. The close of 47, 46, this big bull bar, is 32.25, and the low of this bar is 32.25. So some bears, they sold the close of 46, betting on exhaustion, or at least a climactic bar that's going to go sideways. They sold the close of 46, and they tried to get out break even at 48. Back at their first entry or their original entry, and they were unable to do that. That makes me think that the market may try and go a little bit higher. But you can see we're stalling at obvious resistance, the 28 high, and that is a warning that this might be more of a bull leg in a trading range. What I talked about on the daily blog, we had a lot of trading range trading in here, and we're getting a fairly strong upside breakout, but my concern is we might stall under the resistance level, which is the February 2nd high. Typically, when the market stalls right at support, last year's lows, we stalled right at it. That increases the chances that the market's in a trading range. You want the market to break break beyond support and then pull back. Like 14 or 15 and 16, the market broke through resistance and then pulled back. That's better for the bears. So the bulls really need to break to the upside here. And if it starts to stall for too long, you'll have more and more traders become disappointed. Disappointment bar for the bulls on 49. You can see more traders sold as the market went above 28 and 48. But 49 might be strong enough to lead to at least a little bit higher prices. It's a bad sell below 49. Therefore, the market will probably go a little bit higher. But again, if the market starts to stall for too long, more and more traders give up, which means we could go all the way down here. What about getting back to the low of the day? That might be challenging for the bears. This is pretty strong, but it's still probably a trend line. It's the first real trend line break of this sell-off. Therefore, we may have a fairly deep pullback. Bulls tried to break above the 28 high again for the second time, and they couldn't do it. So the market may pull back here. Now the bulls are trying to form a small pullback bull trend. If you look at the pullbacks ever since the 35 low, they're basically one bar pullbacks. And the bears need to make money below a stop entry in order to make the market go more sideways here. Although this leg does not look that strong or that strongly bullish, it is fairly bullish. It's getting more and more difficult for bears to make money. They're still making money selling above bars like 28, but they're not making all that much money. And because of that, you have to wonder if the market will go higher. If this bar closes on its low as a bear bar, especially if it's an inside bar, I think that will entice more bulls to exit. Inside bar, 150. So it's basically a second entry buy, but just under the 28 high. Bears trying to form a double top with 49 and 51. Some bulls bought during 48, and they got trapped on the pullback, and they started selling out of longs on this current pullback. I think we're probably going to pull back here. Small pullback trend, yes, but it's possible we keep going up. My only problem is, yes, you can argue small, the early stage of a small pullback trend, but it's a small pullback trend within what? It's a small pullback trend within a trading range. Look to the left. All these price levels are going to be resistance levels. The high of here, the midpoint of this bar, the high of this bar. So sure, we can keep drifting up, but the reality is, when I look at the 60-minute chart, this is what I see. I see a pretty strong sell-off and the bull bar, but it's probably the start of the trading range. You can see, looks like bulls starting to give up. So, that's the problem with buying. Give me one second. This is a good example of the problem with buying breakouts like 46 and 47. You can take the trade, but you have to be very quick. Whenever you're buying high in a trading range, you have to be very quick to manage the trade, because stop entries, the stop placement is a challenge. For me, I was long on 46 and actually bought more on 47. But what did I do over the course of the next 3 bars? I got out. It was not doing what I wanted it to do. And, again, it goes kind of like buying above 43. If I'm buying a breakout, I'm buying because I want to get swept into a trade. I want to pay more risk, and I want the market to carry me forward. Otherwise, I wouldn't want to buy at the high. I wouldn't want to buy high. I want to buy on the pullback. And because of that, if the market doesn't carry me forward and stalls, I was wrong. I bought the 47 close, and I was wrong. Yes, it looks like a breakout, but it was not breaking out. It's not going higher. Therefore, it's a leg in a trading range, and I want to exit. And part of the problem was, if your stop is at the 46 low, you're basically selling where more bulls might buy. The reality is, if you buy the 47 close and you scale in below 46, below 43, even more at the 38 low, you're probably going to make money. That's just the reality. This is a trading range. But what you don't want to do is exit where traders are going to scale in. Yesterday's low, that'll be a magnet. The 46 low is a magnet. So, again, we may also pull back to the 34 high. It was reasonable to sell anywhere over here. And a lot of traders, if I was a bear, if I'm an institution and I'm short, and, I don't want to, for whatever reason, I don't want to buy back my short, I just want to scale in, I would sell. And I'm not going to be eager to sell these 2 bars, because I'm going to expect the market to go higher over, the next 10 bars. And, even though, yes, if I expect the market to go higher, I'm better off just closing the trade and selling higher. If I just wait, if I'm short and I just wait, not willing to sell there, strong enough bar, may get a second leg, I don't want to sell that. Strong enough bars, may get a second leg. That's not good for the bulls. If I'm a bull, I'm in trouble. So I'll sell here and I'll sell more below a bear bar. I'll sell this close, I'll sell more below this bar. Break even is all the way down here. That is still pretty far, but it's possible we get down to it. So I would not be at all surprised if the market has to test somewhere in this area. So again, that's kind of how I think about legs in a trading range. The market's very forgiving in a trading range to traders that sell low and scale in, especially if they use wide stops. And the problem is, if I'm long, I don't want to sell out of a long down here. I also don't want to, because to me, if you're selling out of a long, you might as well, it's kind of like selling short. It's just not, if it doesn't make sense to sell out of longs, and if it doesn't make sense to go short down here, then selling out of longs is not ideal. Now, if you're a bull and you're scaling in and your stop is, 5-10 points below the 35 low, if the market clearly becomes bearish, sure, it makes sense to sell out of longs because it would make sense to go short at that point. But right here, you will have traders buying and scaling in, but they're using a wide stop. You can see the market tested the 45 high. So some bears sold, scaled in, buying back shorts at the 45 high. You have other bulls buying at the 45 high as well for scalps. 51, outside down bar, and it might be a big enough bar for at least a small second leg down. So 51 is a little bit of a surprise. And 52 may form a second entry buy, 2 legs down, 49 in the current bar, or you could say, but the problem with that is, to me, this looks like a leg in a trading range. Why could the market not break above 28? It's possible we do it here. The bulls still have a negative gap open, close of 44, the open or close of the prior bar. But to me, this is fairly disappointing. It's becoming easier for the bears to make money selling. And because of that, I suspect bears will become more aggressive selling new highs. So yes, tight bull channel, but you have a second entry buy here and here. Some traders will count this as the new high, therefore this is a high 1, this as a high 2. Good bar for the bulls, but really tough call. If you buy above it, what do you do? And if the market does not race up rather quickly, I suspect you will have traders look to exit. So that's kind of what I've been talking about, where good bar 52, and it's a stop entry, but if you're a bull and you buy above 52, how long are you going to give the market to race up? What's your expectation? If you're buying on a stop entry, then that means you think the market is going to break to the upside. And if you think it's going to break to the upside, you want bears to get trapped. So the bulls want the bears to go up here. They want the market to trigger the buy and go straight up. So how could they do that? Well, one way is we have a bear bar on 51. Some bears sell the close at 51, at 31 even, and they get trapped on 52. And some of those traders try to get out at the low close, 31 even. So they try to sell this close, disappointed on this bar, and they try and buy back their short at their entry price. But you can see the market did not test the close of 51. So bears are trying to exit a losing trade here. One way, okay, it just touched, okay, it just went below it. So bears have a chance to get out at their entry. So less bears are trapped here. We're almost 2 minutes into this bar, and the bulls have not made 1 point buying above 52. So this is fairly disappointing. Disappointed bulls who bought the 52 high on 53, disappointed with 53. Some of those bulls probably bought more lower, and they're deciding, do they get out break even on the entire trade right here, or do they exit at their original entry, the 52 high? Even if we fall below 52, the reality is there's probably buyers at the 52 low. Probably buyers below 54. Bulls, they buy below 52. They see a bear bar. Some of them will wait to buy more below 52 after 53. But then they see 54 as a weak doji, and you'll have some bulls buy below 54. So typical trading range price action. Someone asked in the webinar or the Discord, do I ever put real value in VWAP, BWAP as a rejection area or the 50 EMA? For me, I pay attention to the moving average, the 20 period. I'll pay attention to the simple moving averages on the daily chart, but that's pretty much it. So I do not pay attention to that. For me, I just look at the chart, and I know the odds are there's buyers below 46. So when I see 52 sell off and then immediately bounce, am I surprised? Not at all. When I see there be sellers above 52, am I surprised? No. With a strong enough sell off, bulls bought the 50 low more during 51 and 52. They're disappointed. So what are they going to do back to this price level? They're going to sell. You have other bulls that just say, whatever, I'll just buy above this bar and scale in. And that's what's going on right here. So the reality is, I think we're in a trading range. We may go to a new high. This is a tight bull channel. This is a trend line break. We may have to get to a new high. 15-minute chart. You can see the rally is fairly tight. Chart. You can see the rally is fairly tight. So I would not at all be surprised if this rally breaks above 49. The bulls will see this as a credible wedge bottom. They'll actually see it as a truncated wedge, 49 being the first push, 52 being the second, and 55 being the third, with the third push being a higher low from 52. But the bulls need a decent signal bar here, and I suspect they will probably not get it. Trading range day, better to assume signal bars are going to be disappointing. Bad signal bar on 55 lowers the probability of the buy, but trading range. And it's common in trading ranges to get bad signal bars. Some traders selling around the high of 52. So important bar. Will the current bar close on its high? Will it be a small bar? Will it have a tail? Will it reverse? We're a minute and a half into the bar, and we're not breaking to the upside all that strong. We tested the open of the week and started pulling back. You also had some bulls, again, that bought above 52, and then they pulled their orders down. So rather than get out their entry price, which would be one tick above 52, 33 even, they may put their entry price, they may set their target to, 1 or 2 ticks below it. So 33 even is their entry price. Maybe they put their target at 32.50. You can see it touch 32.50. Some of them will drag it down another point. The longer this goes sideways, you may have more of those traders just exit at break even on the entire trade. We have a wedge, and because of that, there is the risk of a possible downside breakout. I bought above 52, and I bought more below 54, and I just got out break even. I know the market will probably go back to the 52 high, but I do not want to get trapped buying high in what might be a trading range. Look at the context, 3 pushes, 1, 2, 3. So we have a bull flag. Flags fail often in trading ranges. I'm always open to the possibility of the opposite. If we get a measured move down, if we break below this wedge and sell off, where does that take us? Look right here. What about the bears that sold the high of 34? Do you think that they're going to lose money? I do not. Remember what I talked about earlier. Bears sell this high, they sell this close, they sell more below a bear bar. Break even is somewhere down here. We're above the break even price. I don't know what the probability is, but we've all heard Al talk about it. The probability is really high for the bears to be able to get out and break even. All right, the bears are trying to get the downside breakout. Again, this looks like a trading range, and even the bulls that bought 52 and scaled in could not get out break even. That makes me a little bit suspicious. 3-bar micro channel, probably buyers below, but whenever you get a rally and it starts to go more and more sideways, you always have to wonder about the potential of the downside breakout. Same thing up here. We have a rally, probably going to be a bear flag, and then we break to the upside and pull back. So here, this whole thing is probably a large bear flag. Remember what I said about major trend reversal? We have a trend line break, we broke the trend line, and we have a lower low major trend reversal. But I mentioned that this is too strong to the downside, and that the market will probably have to pull back and form a higher low. To me, this is a strong enough trend line break that bulls will look to buy below. So again, go back to what I talked about around this area on 51. What I mentioned was I was happy to buy 46 and 47, but I'm only willing to buy up here if I think the breakout is strong to continue and go higher. If it's a leg in a trading range, I don't want to be long because I don't want to put a stop all the way down here. And the reality is, for me, I'm flat. I got out of break even. It was taking too long to get up here. And, I always kind of think of a mental kind of clock. Like, I know the risk is going up and up and up for a downside breakout. And I don't want to be long if there's the risk of a downside breakout. So the other thing is, again, I know that the market is forgiving for bears that sell and scale in. So again, I think we're going to get to this area, and we may get back to the 34 high. So not always in short yet, but I don't think it will take all that much for bears to start selling. This is what I was talking about. Strong enough breakout and follow through, bears able to exit with a smaller loss. Strong enough breakout and follow through, bears able to exit with a smaller loss. Bulls, they want a second leg trap, but strong enough breakout, probably going at least a little bit lower. For the bulls, they want a strong reversal bar and to trap the bulls and trap the bears into selling too low. But to me, 58 and 59 is strong enough for at least a small second leg down. And it'll probably try and test the 34 high at a minimum. So sell to close 59, stop above probably 58. A lot of these traders that are selling here will be fairly quick to exit if the market doesn't collapse down. What about buying 50% pullback, betting on a higher low with 35? Well, the reality is we're probably going to get a higher low. But do you really want to buy right now when the odds are the bears are going to get a small second leg? I do not. Whenever, it makes sense. I get the logic, buying 50% pullback, betting on a higher low. But this is a major trend reversal. And because of that, we could sell off all the way to below 35 and then turn up. So my problem with buying right here is stop placement. If I'm buying right now, I really don't want to sell out of longs at the 35 low. It's the same logic I've talked about ever since the 47 close. The reason I was wanting to get out around after 50 or 49, the reason I was interested in exiting is the risk is too big. I want to buy low in a trading range, not high. I want to sell high in the trading range. I want to sell low. We're breaking to the downside. And this is what again, we don't have to stop at the 34 high. The 35, I picked the 34 high just because it's a bad stop entry sell. Obviously, the 34 close is the target. And, we don't have to stop at the 35 low either. So the only thing I would be doing here is is short or flat. Testing the low of 38, that will be another magnet. See profit taking around the 38 low. So probably first left will fail and the market will get at least a small second leg, but probably sideways fairly soon. Bears got their second leg down from 59 and 60 on the current bar. Probably the buyers not far below and more sideways, but probably going to get to the 35 high. So probably more sideways here. Reversal bar on 67. It's a big bar, probably strong enough for at least a small second leg up, but big bar, big risk. And right now we're pulling back 50%. Bad sell signal below 68. So probably buyers below. It's possible to buy above 67 is a trap, and we go below it. You can see the market is testing the 66 close. Disappointing pullback for the bulls that bought above 67. A lot of those bulls that buy above 67 disappointed with 68 and maybe got out break even during 69. Break even back at the 67 high. Other bulls will buy more below 68. I think my mic may have been muted. Always in long, probably above. Always in bulls buying here and bears getting out. Double bottom 61, 67, test of 34. We may test back up in this area. So far the bulls are not getting good follow through, but to me, I think 67 is a credible buy for a swing trade in a couple of legs, testing somewhere around the open of the month, probably the 55 high, maybe the 52 high. We tested the 32 close, and that might have been the more credible sell to close bar. As you can see, the market tested it, went one tick below it, and turned up. you don't have, 34 may not have been as reasonable to sell. Therefore, it was not needed to be tested. We also tested the 34 high. So to me, the market's done the minimum. So bears probably better be flat, and bulls, some bulls buying, taking the chance that we rally into the close. Other traders waiting. You can see the market found sellers at the 52 low. Bulls buying the 52 low, buying more lower. Probably more sideways. Outside down on 71, but that follows through. And outside down on 71, but big tail below. That will lower the probability of the short below 71. Probably buyers below, scaling in lower. But we could easily fall below 67 before we reverse up. A little bit of a surprise bar on 72, but bottom of the tight trading range since 60. Probably buyers below. And bulls that bought the 71 low and more lower will make money. Reasonable buy, but late in the day. And time, only about 6 bars left, so anyone buying above it is probably going to be pretty quick to scalp out. All right, well, looks like we're going to get the rally going into the close, which is pretty common. A lot of traders, it's common for the market to shake you out of the trade. And, I was long in here hoping for an upside breakout, but the trade was taking too long. Therefore, I got out of break even. So I'm missing this. Probably better just to let it go. Time is working against you, and it can be, things can happen really fast at the end of the day. So I think most traders should just be flat. Just need a couple more minutes before I start the review. But I want to say, this happens really frequently. And, there's many arguments towards it. Traders positioning themselves going into the close of the day. The market's trying to close above yesterday's low, which obviously it is right now. And it can be upsetting to see this rally and let it go. But that is exactly what you should do. And, it's late in the day. It's just, most of the time, it's not worth it. But you can see all these bull bars, traders bought them and bought more lower, and they made money. So I will begin the review here in about 5 minutes. I've opened the question box. So I will take a look at the questions here shortly. Feel free to ask the questions in the Discord as well. So overall, we found profit taking at the trend line. We have a bear trend line here, and you can see connecting from the high of April 22 to the February high of this year. I thought that the risk was getting fairly big for the bulls. And because of that, strong bull bars here, and it was reasonable to expect profit taking. When the risk gets big, traders start taking profits and betting on a pullback. And because of that, bears start selling. And some bears will sell for just quick scalps. But more or less, I see this as profit taking. The market's deciding what to do here. We're testing this resistance level right here. And, the way I see it is Two things. One, we're hesitating at this resistance level, which is not ideal. Whenever the market stalls at that resistance or support and doesn't break below it first, that's a warning the market's in a trading range. Strong sell-off, and we're hesitating at support. That means something is wrong here. The market should have broken beyond support. That's why you hear I'll talk about how whenever you get a strong breakout and it's not quite above or below all the bars to the left, it increases the risk of some kind of reversal. So probably sideways over the next couple of days. To me, even there's probably buyers below Monday's low, but probably going to go more sideways and probably sellers above yesterday's high. So I think we're going to have, this is part of a pullback that may last a day or two or three. Weekly chart, we're hovering around the open of the week and open of the month. Probably going to go more sideways. Today, fairly interesting. We had such a big sell-off yesterday, and it was basically a major trend reversal. So very strong trend. We broke below the trend line here, and it's a trend line break. We can see it pretty clear on a 60-minute chart. Strong rally, bear bar, which is right here, trend line break, probably sideways. And the market rallied to above the high. It gapped up, and we got a 2-bar sell-off. Bar 2, probably always in short, reasonable sell to close. Full break out of the channel, but the channel up is tight, and that will limit the downside. 3, a big bar, so climactic. Is it buy to close, sell to close? Well, it's probably a sell to close bar, but there will be bulls that'll buy it. Some bulls bought the one low, buy more on the 3 close. Some bulls will buy just because it's under the moving average. So, but the reality is 1, 2, and 3 is strong enough to let us know one thing, really two. The market's either in a bear trend or a trading range. That means traders will sell to close and they'll scale in higher. The difficult part here is you have 2 options. One is you sell the close and you get out if the bulls get 2 or 3 bars. The other option is you hold and use a wide stop. What's wide? Probably 5 plus maybe 10 points above bar 1. So the management's not that easy. 2, bull bar, disappointment after the breakout, possible failed breakout and a test of, so it's possible breakout pullback buy, and we may rally up to here. 2 consecutive bull bars. The bulls probably need 1 or 2 more bars, but this is damaging to the bear case. And then 3, a doji. Low 1 short, probably buyers below bar. I said 3 bull bars. Bar 6 is a doji. 3 consecutive bull bars, probably buyers below and going at least a little bit higher. But there's probably sellers somewhere up here. And then we got the surprise breakout on 7. 7's a big bar, but it rallied above 1 and then sold off. So probably entering the trading range. That's why selling down here is fairly difficult, because if you sell here or sell anywhere during these bars, you really need to sell more at the high of the day. Otherwise, too much risk that you'll get trapped. 8, bear bar, but a doji following a micro channel since the 4 low, probably buyers below for at least a small second leg, but it's a possible wedge top, 73, 1, and 7, and you can call it an expanding triangle. 3 pushes, and then a low on 75, low on 4. Big tail on 7 lowers the probability of bulls buying above 8. 8, another big tail, and then 9, a big bear bar, a little bit of, 10, big bear bar. Strong enough surprise in 10. Is it sell to close? It might be. We're probably going down to the 3 low. It was reasonable to sell 3 and sell more higher. 11, another big bear bar. So sell to close 10, sell to close 11, and reasonable to, let me back up. Sell to close 10 and sell to close 11, but the rally up to 9 is pretty strong. And if you think about it, this should get a second leg up, just like the sell-off to the downside should get a second leg down. So traders will buy and buy more lower, betting on a bounce, which is why this happened. Now, strong breakout and then strong second leg down. The market's probably in a bear trend or trading range. And even though we're closing gaps, like we closed the gap from the 1 low during the breakout of 2 and 3, we closed that gap. And we closed the gap below 4 during 11. This is strong enough to lead to a second leg down. So if you're selling above 13, if you're buying the close of 13, that may be a mistake. This is a strong enough breakout for a second leg. And over here, it's technically a second leg trap. We went down on 1, pulled back on 2, and then went down on 3. So it's really not 3 bars down. I'm going to show that on like a 1-minute chart really quick, because I think it's worth mentioning. We sold off, rallied, sold off, and then sold off again. So it's kind of like a parabolic wedge. But more importantly, it's 2 legs down. So 12 and 13, disappointing, but I suspect the bulls are trapped, and they may use this bounce to sell out of longs, which is why 14 closed on its low. Probably buyers below and at least a small second leg below 14 or below 11. So we may not go straight down. We'll probably go sideways. Big bar, 15, pulled back, failed to close below 12 or 11. Sign of weakness by the bears, but getting, starting to form pretty decent sized bear bars. And then you can see bulls got trapped buying the 14 low or the 13 low. Some bulls bought the 13 low, buying below bull bar, 47.25. They scaled in lower. And look at this high, 47 even. So the bulls that bought the 13 low and more lower were unable to make a profit. 16, you can call it a micro double bottom. 17, you can call it a micro double bottom. Down on 15, up on 15, down on 16, up on 17. But it's a micro channel since 14. So probably sellers above and scaling it higher. 18, outside down bar. Possible breakout below a wedge for 11 and 17. But the bears need follow through. The tail on 18 is enough to make me think there's probably buyers not far below. And another thing to mention is we had a breakout point at the 35 high, and the breakout point was created on 61 and 62. So one has to think about the possibility of the market closing this gap, which it did over here. Another target is all the way down here, the 21 high and the 21 low. This is a strong enough sell-off that the bears will probably get a second leg down. And if possible, this is that second leg down. Doji on 17, so failed to break below the 18. Doji on 19 failed to break below the 18 low, but fairly tight channel. One of these breakouts will reverse, but it's starting to form open gaps. We have a gap at the 11 close and the 17 high. You have to wonder, sorry about that, I just hit the mic. You have to wonder about the possibility of a measuring gap. So a measuring gap from maybe the 7 high to the 12 close, which takes you all the way down to here. And then surprise on 20. 19 was a breakout and a pullback, and then 20 was resumption. Is 20 a sell to close bar? It probably is, but the problem with selling 20 is the sell-off is fairly climactic. 2 big bear bars and then a rally. Big bear bar, big tail. Bear bar, pullback. Outside down bar, and a big tail on the follow-through bar. And now we have a big bear bar closing when it's low. So now we have the best looking bear bar in the entire sell-off. Probably exhaustion fairly soon. All of these tails are buying pressure. We went down and up. Down here and then up on 17. We went down on 15, up on 15, down on 12, up, down on 11, up on 12, and 13. So this looks like a bear breakout below a channel. It's probably going to find buyers not far below. 21, a bull bar. Bulls bought the 19 low, more on 20 and 21, and they're getting out on 21, and then a surprise second leg down on 22. So I mentioned this might be exhaustion. It's the best looking bear bar, and 60% chance. I don't know if it's 60%, is it 50-50? You know, who cares? It's close. It happens pretty frequently. You get an exhaustion bar and then another leg down, and then you rally back to this bar. So some bulls, they buy 20 and they scale in lower and they're disappointed and they get out at their original entry, which is what happened on 23 and 24. Tight bear channel all the way down to 22, so probably a minor reversal and sideways at yesterday's low. So that is the target. With all this trading range price action over the past few days, we went above yesterday's high and now we're below yesterday's low, probably sideways. 24, buyers below, consecutive bull bars, consecutive sell climaxes here, 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 even here, or here. So after, usually, whenever you get a channel down, you get 3 or 4 reversals up, reversal up, another reversal up, another one, another one. You could even include this one if you wanted. The odds start to increase that the market is going to go more sideways. And then 28 went above 25 and turned down, and then second entry buy. So if I'm a bull, if I'm a bear, what would I do? I'd get out of longs above 29. You're at the target. We're also basically at a measured move down from these bars. So we're probably not going all that much lower. We may go a little bit lower, but I suspect that we're going to develop a trading range soon. So I think it's okay to exit shorts above this bar, lock in profit. You don't want to give it, and wait for a few bars. 28, rallied, sold off, tested the high of 22. Buy climax, whenever you get consecutive, sell climax, whenever you get consecutive sell climaxes, here, here, and here, you typically test the last sell climax high, which is up here, and that's what's going on right here. But minor reversal. So even if we get to the moving average, probably sellers not far above. And then buyers below 28. 29, are there buyers or sellers above? Probably, it's the middle of the tight trading range. We're probably going to go higher, but if we do, we're probably not going all that much higher. So bears will sell, scaling higher. Bulls will buy, scaling lower. If you're buying, where's your stop? At a minimum, it probably needs to be somewhere down here, because we could easily fall for almost a measured move down and reverse up. So if you're buying here, I don't think it's that simple. Surprise breakout on 30. If I did buy and I got this, for me, I would be pretty quick to exit. And the reason is you could fall all the way down here before you turn up. So for bears, for the bulls, if they exit here and they just wait for a credible stop entry, it will be an easier trade. And follow through on 31. So probably going to go a little bit lower. You can see the bulls that bought the 29 low are trapped. They bought the 29 low. Maybe they scaled in on 30 or 31, and the market is not letting them out at the 29 low. And now we're getting another big bear bar. So becoming fairly climactic and unsustainable Triangle, 22, 25, and maybe 27, 3 pushes down. Or you can say 22, and then either one of these pushes, 25 and 27, is the second push, and then 29 is the third. Probably going to test back to the middle in here. And then a bear bar on 33, minimum follow through. But we had a bull bar, we had a big bear bar, and then a trading range bar for follow through. We have another big breakout bar on 32, and then a trading range bar. So to me, I think we're going back up here fairly soon. 34, bear bar, closing below, closing at the 33 low. Probably not going much lower. It's still sell to close, but very climactic. And most traders are better off waiting for a complex pullback. There will be bulls that bought yesterday's low in here and scaled in lower, and they're probably going to make money. Surprise breakout, 35, outside up. Traders will sell the 34 high and scale in, but to me, for the reasons I just stated, I think most bears should exit above 34. 35 is a strong enough bar, probably at least a small second leg up, and instead we got a strong follow through. So probably buy the close 36, but we have a big sell off and a big rally. Bears will sell and scale in, and some of those bears will try and just get out around the midpoint. Bulls, you'll have some bears that sold 35 high and more higher, and they were selling 35 hoping for a quick pullback and a quick scalp on the trade. They sell and scalp out, and instead the market went straight up, so you have bears that are trapped, and they may try and get out back at the 35 high. 37, bear bar, but after these two bull bars, 35, 36, probably buyers below, scaling in lower. And then you can see the market retested the 33 high as well as the 35 high and went up for a second leg. Bull bar, 39, but bad follow through 40, hesitating at the moving average. And that is a sign of weakness by the bulls. We're getting near, we're at yesterday's low. The bears want a measuring gap and lower prices, but I suspect we're probably going to get to the apex at a minimum. So we're probably going to 41.31 at minimum, as well as the 28 high. It's the top of the most recent sell climax. Therefore, I think selling here is a mistake. Bulls will probably buy and scale in lower. But if you're long, you need to stop at a minimum somewhere down here, and better if you can scale in lower. Bear bar, 41, but lots of bull bars, 3 big bull bars closing on their highs. Probably the trading range more, which means buyers not far below. It's starting to go sideways. 42, big bull bar, closing on its high. It's reasonable buy above, but it's forcing you to buy at the top of the trading range. And a lot of traders that take that buy will be quick to scalp out. 44 broke to the upside and sold off, so that will disappoint some traders, but it's a bad sell signal. Some bulls will just exit, betting that the market won't go that much higher. Other bulls will wait for a bear bar closing on its low. And the reason for that is you have some bears who were short, and they were not anticipating this to rally up to 44. And those bears are disappointed. If they're disappointed, a lot of them sell and scale in, and they will look to get out at their first entry, which means they're going to buy somewhere in here. But 44 is a reminder that although the market's probably going higher, we're probably not going that much higher. 45, the bear bar. And then 46, the surprise breakout. Bulls bought the 44 low, more lower, and then we broke strongly to the upside. Possible buy vacuum test at the open of the month and open of the week. Surprise bar, but we sold off here, sold off here, sold off here, and now we're breaking to the upside. You have to ask yourself, is this the start of a bull trend, or is this going to lead to exhaustion? At the moment, I think 46 is a strong enough bar to lead to higher prices, but probably going to go sideways soon. Follow through, 47, trying to trap the bulls, trying to trap the bears. Some bears sold anywhere in here, scaled in, but Bears that sold the 44 high and more higher made money. That is a sign of weakness by the bulls. Bulls want to get back to the March high, this blue line, but which is also where traders started to get trapped. You had bulls buying the 17 low, betting that the market would not break below a wedge, and instead it did. That's why the market had a measured move down. Measured move from the high of 7 to the low of 16, which is kind of what happened over here. We have a wedge, 49, 52, and maybe 54, not great shape, but you can see we basically went down for a measured move almost to the tick and then reversed up. That's very common in trading ranges. The market tries to form a bottom and you end up breaking below it. And the reason for that is it minimizes the risk. If you're buying high in a trading range, you can only do that under two conditions. One, you're buying during strong momentum and you're going to be very quick to exit if the momentum stalls, which is what happened here. The other example is, and the reason for that is your risk is big. And if your risk is big, a lot of those traders, they will not risk a lot at the top of the trading range. Other traders, they'll wait for a pullback. So they buy above a bar like 55, even though it looks bad. And when it starts to go up and stall, maybe their stop's below 52. So they have small risk and good risk reward. But they have low probability. They buy above 55. And when the market goes up and stalls, they quickly exit. It went up, pulled back, went up again, and bulls gave up. So that is what happened over here. But you will have traders who will buy and buy more above a bull bar here or here. And let me show it like this. So bulls buy above here. They buy more above a bull bar, maybe here. That didn't get hit. But maybe the bulls that bought above here, that obviously got filled. Now, the reality is, if you buy here and buy more here, a lot of traders will buy one position and then double their position above a stop entry, which further moves their break-even trade higher. But even here, not really a great buy. Anyways, I don't want to get sidetracked on that. Breakout follow through. This is a break-even price, and this channel down is tight. It's probably going to develop into a trading range more than an endless pullback. So probably needing to pull back fairly soon. 49, 48 bear bar. Some bulls bought here. Some bears sold the 46 high, more higher on 47. Disappointed in trying to get out break even. And the bulls got a small second leg up and an immediate reversal. Sorry about that. So for the bulls, they're willing to buy here as long as there's a second leg. The 49 is a very disappointing second leg. And that is enough for traders to conclude we're still in the trading range. We're at the target, the 29 high, 28 high. So I suspect probably sideways here. 50, second entry buy, but it's a tight trading range. You can call it an IOI pattern, but IOI patterns are meaningless at the top of tight trading ranges because, it's basically an inside bar. And the important thing to think about is inside bars are pullbacks. So let's find an inside bar here. We don't really have any good ones. Here's maybe an inside bar, so it's kind of like a triangle. It's not really because it went below here, but here's an inside bar, 63. 63 is actually a reasonable buy because it's the middle, it's a breakout. Strong rally here, probably going to pull back. Give me just 1 second. Okay. What I was saying is it's an inside bar, but it's following a strong breakout. Therefore, there's buyers below the bar and buyers above. High ones during breakout mode or during a breakout, especially leg one, are reasonable. 48, maybe it's leg one, it reset the count, 46, 47, so it's reasonable to buy. But the reality is, if you're taking that buy above 48 and you're buying at resistance, you're going to have your, if I'm buying above that bar, I would have my finger on the close. And at any point, if this thing goes up and starts to even just pull back, first off, I wouldn't buy above it, but if I did and it starts to pull back, I would get out. Outside down, 51, I mentioned that traders are giving up on the idea of a measuring gap, low of 35, high of any of these bars projecting up. Big sell-off, pullback, probably sideways. I also mentioned that there's bears that sold somewhere in here. 35 close, 34 close, 34 high, 32 close, anywhere in here. And a lot of those bears sell and they wait for a bear bar and they sell more below a bear bar. So that makes me think we're probably going to go back in this area, maybe around 41.25. Reversal on 52, but 51 and 52 was a decent size sell-off, and the bears, the bulls that bought the 50 low and scaled in, are probably disappointed. 53, outside down bar, probably going to pull back and go a little bit lower, but bulls bought above 50. It almost went outside down. It's basically a bear inside bar, probably buyers below scaling in, but we may fall below 52. Bulls buy above 52, they buy more below 52, and they will try and get out back to the 52 high. But you can see some bulls that bought the 50 low and more lower got out around their first entry, the 50 low. 54, it's a doji bar. Some bulls will buy below 54 that bought above 52. They buy above 52, they buy more below 54, betting that the market's not going to fall all that much lower. Bears, they see 53 as a strong enough bear bar for a second leg. They see 54 as the pullback. So it went down and then pulled back on the doji. And because of that, they will buy below 54 because they'll see it as two legs down. It may be a test of 52. And that's what happened on 55. 55, it is a bull bar, but it failed to close on its high. It's a micro channel with 53, and it's a doji bar. When you look at that, it is a wedge bottom, 49, 52, and 55, and it's a truncated wedge, but it's a wedge bottom or wedge pullback. You can call it a bull flag at the top of a trading range, and it doesn't look that good. Do you really want to buy above 55? Probably not. And because of that, you will have traders be fairly quick to exit. Bulls that bought above 52, bought more lower, like 54, they will probably exit around break even here. 56, you can see it rallied and then tested the 52 close and then immediately sold off and tested the open of the week and open of the month. You have to wonder about the idea of a bear breakout below a wedge bull flag and a measure move down. 57, bull bar, it's possible two legs up. Leg one, 55, pull back. So leg one, 55, 56, pulled back on 56. Second leg up on 57. So a lot of the bulls that bought above 54 will see these two bars as two legs up. We went up, pulled back, and then up and pulled back again. And a lot of traders will start to exit, which is what happened on 58. 58 breaking below 52, but could not close below 52. It's a little bit of a surprise, though, and because of that, it may lead to lower prices. Remember what I said, break-even traders down here that sold anywhere in here and more below a bear bar, either here or here, will probably be able to avoid a loss. Follow through on 59. It's a bear breakout, follow through. Is it always in short? It probably is. But you're selling in what might be a higher low. If you go back to the recording, what I talked about was it is always in short, and it's probably going to go lower, but there will be bulls buying down here. The challenge with buying down here, though, is that where do you put your stop? The reality is traders will probably buy more below 35. So if I'm buying in this area, I'm probably buying more at the 35 low. That's why most traders would exit here and wait for the market to bottom. Follow through on 60, but if the body is getting smaller, you can see it's testing the 38 low, and then it went below 38, came very close to the 34 high, basically tested the 32 close and turned up. And look what happened. Bulls that bought the 52 low, scaled in lower, were able to make money, even though it didn't touch it. You know, some of those traders, they buy and they get out a couple ticks below. But regardless, if you bought anywhere in here and scaled in, you have the opportunity to make money. Small loss on your first entry, profit on your second. So probably going to go sideways to up here. Low one short on 63. But strong enough bull bar, 62, probably buyers below in a small second leg up. 64, a bear bar, but it's a bad stop entry buy. Some traders bought the 62 close, disappointed 63, 64. They'll probably get out break even on 65, and you can see 65 tested the 62 close and turned down. Bear bar on 66. It was a strong enough sell-off. It was a 5-bar micro channel, probably sellers above. And the bears are getting a second leg. But what do you think they're going to do down here? Are the bears going to sell more at the 61 low or the 62 low or the close of 32? No, they're probably buying down here. So bulls buying to go long using wide stops somewhere down here. Bears probably buying back shorts, which means the market's probably going to go sideways. And you can see all the bulls that bought anywhere in here and more lower made money. What about buying above 67? Well, it's not that simple of a trade. It is a strong buy signal bar, and it looks like a good buy, but it's a fairly tight trading range. It's 2 legs down. We triggered a stop below 63 on 64. We pulled back and we sold off. So it's basically a second leg trap. Leg 1, pull back, leg 2, nested within a larger second leg trap. Leg 1, pull back, leg 2. It's also a double bottom. You can call it a double bottom with this low, 38, and over here. So the problem is you will have bears. Some traders sold 66, even though it was probably a really dumb trade to sell down there. It's selling at the bottom of the trading range. They'll sell, and they'll sell more higher. And I suspect the market's going to go sideways and let those bears out, which means we're probably going to have a fairly deep pullback. 68, disappointment after 67. Bulls buying in a fairly tight trading range have bad risk reward. Big stop entry, bad risk reward, not a great probability. That means there might be more sellers above 67 scaling in higher. And you can see what happened on this bar. We sold off, let the bears out, and then turned up. So now we have 2 dojis after 67. If you bought 67, how are you feeling? You know, you're probably happy that 69 turned up, but the reality is this is not what you want to see. This, to me, looks like trading range trading. Traders buy the 62 close, they bought too high, they scale in lower, and they're getting out at the 62 close. And bad stop entry buy above 69. Basically went up for 2 legs, up, down, and then up. We went up again on 69 and 70, pulled back, and then went up again on 71. Testing the 52 low. Bulls bought the 52 low, scaled in, made money. You can call it a double top with 63 here and 71 here. What about selling below? I would not. It's an outside bar. While we may go lower, if anything, we're probably going to sell off. If we do sell off, there's probably buyers down here. So probably buyers below scaling in. Surprise breakout 72. We will probably go at least a little bit lower, maybe get a small second leg, but at the bottom of a trading range, so probably buyers not far below. Doji on 73. Bulls buy the 71 low. They buy more during 72. and they're disappointed by the close of 72, so they scalp out. 74, bull bar, reversing up. What about buying above 74? It's probably an okay buy, but it's a fairly tight channel down. And the bears that sold, the bulls that bought the 71 low and bought more lower are disappointed. They did not anticipate the market selling off this much. So you will have traders buying back shorts, selling out longs at this area, and some bulls may sell for a scalp. But to me, I would not sell above 74. Outside down 75, but probably buyers below 74 and buyers below 75. And then the bulls got a second entry buy on 76, and we rallied into the close. Stop entries, reasonable to sell too, but difficult in here. If I sell below 2, I think, probably better to just exit above, maybe on the close of 6, and basically take a break-even trade. Selling below 10 is reasonable. Selling below 14 is reasonable. Betting on a second leg down, 10 and 11. You can sell below 18, and if you do, maybe you get out if the next bar is the bull reversal bar closing on a 5. And sell below 30, but pretty challenging. I thought it was reasonable to buy above 35, and you can buy above 43, and maybe you get out break even, or you wait and exit below a bear bar, which you never got, and maybe you get out below 51. Certainly, if I'd get out below 51, and not a great buy above 52. And if you did, maybe you get out below 53 or 58. But if you're buying in here, you're buying the top of the trading range, and there's an increased risk of a downside breakout. Selling down here, you could probably sell below any of these bars, but you have to be very quick to make decisions, and I'd get out a couple points above. And if you buy above this bar, probably get out maybe around break even in here. If you buy here, probably stop below, you don't get stopped out, and maybe you hold into this. Limit orders, probably buyers below 6 but are never triggered. Sellers above 8, sellers above 12 scaling in, but again, need a wide stop. And sellers really above any of these bars, and buyers below 24, probably buyers below 26, buyers even below 37, but hard to do. Bull bar, bear bar closing on its low, buyers even below 40, sellers probably above, and buyers below 64 scaling in, buyers below really any of these lows scaling in lower. Buy the close, sell the close, probably sell the close too if you're quick. Buy the close, I don't know through here, tough call. Sell the close at 10, you can sell the close at 11, but deep pullback here, probably going to get a deep pullback as well, but you can sell, especially you can sell the close if you can use a wide stop and scale in. Sell the close probably 15, 16, sell the close 18, 19, 20. I would not sell the close at 22. If anything, I'd probably buy or scalp. Sell the close at 31, and that's probably it for selling. Buy the close, probably buy the close 35. Reasonable buy the close at 36, especially if you can use a wide stop and scale in. Buy the close 47. I think you can. It's pretty aggressive, and you have to be very quick to exit when you don't get the follow through you want, though. So that's the one caveat there. Probably sell the close 59 if you can be quick and make decisions. But if you're selling, it's a scalp, and you're basically taking profits below 38. So dangerous to sell this close, and that's probably it for buy the close, sell the close. Let me take a look at questions. Question: I bought above. Move the question box here. I bought above 74 and got out below 75. So I bought above 74, got out below 75. Since I was disappointed in the follow through, was this reasonable, or should I have kept my stop below 74 and relied on it? Yeah, I think that's the challenge of trading ranges. The market is always trying to get you to do something dumb. Buying above 74. Well, let me back up. whenever you're in the trading range, usually you get disappointment. And for me, if I am, find a better example. So if I'm buying above 12, I'm buying in what's probably a trading range, maybe a bear trend. So if I'm buying above 12, I'm anticipating that I'm probably going to be wrong. So the market rallies and I get a bear bar. I'm going to exit below 14. Why? Because it could be, and it very well might be, a bear trend. Bear trends mean second leg. So I could get all the way, down to here. If I think it's a trading range, and if I buy here, and I think, worst case, we fall below 11 and find buyers, then I'm not going to exit. I'm probably just going to buy more below 11. And that's the problem over here. If I buy above 74, I'm clearly buying after a lot of bull bars, buying near the 35 low. So if I buy above 74, time is a problem. It's very late in the day, and you have to be really quick to make decisions. If anything, I'm using a wide stop, at least, 1 or 2 points below 74, just in case we reverse up. But for me, I would not get out of shorts. I would not get out of longs below 75. I would keep the stop at a minimum below 74, and better if you can use, 1 or 2 points below 74. But you bring up a good point. Whenever you're in the trading range, it's fairly difficult. And for me, when it's late in the day, I would be extra cautious about taking any trades because it's so easy to get trapped into a bad trade. I also sold below 51, stopped above 49. Sold below 51, stopped above 49. I think that's okay. Thinking there's a 40% chance we'd get to the close of 34 before my stop was run. Yeah, I think that's okay. That's a good trade. And, when you take that, you have to think there's going to be adverse pullbacks against you to try and shake you out of the trade. So for me, if you're selling here in a tight bull channel, I would be expecting bad follow through. The Walmart trade, you sell, stop above, set a target down here, and just wait. So I think that's good. Are bulls registering this close as a bull spike, expecting a bull channel at the open on Wednesday? Or is this bull spike to be ignored? Well, it depends on your viewpoint of, this person's asking about the daily chart. And what they're asking is this a breakout that's going to lead to a spike, pullback, and channel? Or is this late in a breakout and it's going to pull back? To me, I think this is more exhaustion than the start of a breakout. Now, exhaustion typically means a pullback and sideways. It does not mean reversal. So even if there's buyers, I believe there's buyers somewhere below. So bulls buying 50% of these two bars, bulls buying this low, bulls buying down here. So you'll have some bulls, they're momentum bulls, and they're using this to take profits. You have other bulls that are value bulls, and they will look to buy and scale in lower. So to me, I think we're going to try and go sideways for at least a day or two or three, and the market's going to decide, are we going to test the March 22 high and close this breakout point, or are we going to keep it open and break out and test the February high? So to me, it looks strong, but I am suspicious. 2 legs up at what is probably a trading range and probably going to find disappointment. Okay, hope everyone has a good rest of their day, and it'll be interesting to see what happens tomorrow. Probably bad follow through for the bears in sideways tomorrow. Okay, have a good night.